just for a moment. You're going to dig out that speech now.
I am.
I know you will. I'm pretty sure it was Mr. Fisher. Anyway, let's get to this. Tariffs, are they a good or a bad thing? Big debate already this morning. Jim Carron, Morgan Stanley, wrote in a little bit earlier. He said, everyone knows that tariffs are coming, but the markets don't think it will be as bad as some many fear. In fact, the market may see positives to it as well if the tariffs are targeted. It could help manufacturing and capex. Kevin Gordon at Charles Schwab writes in immediately and said, it's worth noting that ISM manufacturing plunged after the tariffs were implemented in 2018 and industrial production slowed after that. There was not a manufacturing boost. That debate is ongoing into 2025.
Because there's a lot of questions about the inputs to the U.S. manufacturing that come from overseas and if any of this will drive up those costs. Also, you have to think about Trump 1.0. The retaliatory measures that China used, which was to go buy soybeans in Brazil instead of from the United States, and then the billions of dollars of the farmers' bailout that came from the federal government. And then my third point would be personnel's policy. A name we got yesterday that no one's really talking about is a name we know, Peter Navarro. He likes to be the last one in the room. So if Treasury Secretary Scott Bessent, once he's confirmed, goes and talks to the president, says you should really use this as a negotiating tactic, who's going to run in after him? Someone named Peter Navarro, who really wants to put the walls up.
We got derailed, so we should probably go back to it and get derailed again. Have we got confirmation?
Okay, really? I'm gonna resign now.
I think it's just sadder that I remember a speech from a decade ago.
Yeah, except that I got the date wrong and I got the person. It was Richard Fisher and it was 2014. Okay. But this was the quote.
The sentiment remains the same.
But the sentiment is actually fantastic and it's a great parallel. He talked about quantitative easing and the incredibly low rates of 2013, putting, quote, beer goggles on investors by creating a line of sight where everything looks good. What are the beer goggles right now? Is it simply that things really are that good?
It's a fantastic save, and it's a fantastic speech.
Thank you.
And a brilliant quote, perfect for the moment we're in. Coming up this hour is the lineup for you. It looks like this. Nouriel Roubini of Roubini Macro Associates as a risk-on mood sends stocks higher. Eric Resnick of KSL Capital on job strength in the hospitality sector. And Kathy Jones of Charles Schwab making a case for bonds in 2025. We begin this hour with stocks mostly fat, following the S&P 500's 56th record of the year so far. Nouriel Roubini of Roubini Macro Associates looking ahead to the new year and writing this. Some of Trump's policies will increase growth and reduce inflation, while others could be stagflationary. So the impact on growth, inflation, and on markets depends on how much of the former versus the latter. Nouriel joins us now for more. Nouriel, wonderful to see you, sir.
Great seeing you.
How difficult does it make it to look ahead to next year with any real clarity, to come up with some kind of outlook when things are so difficult?
There's a lot of policy uncertainty. As I pointed out, some of the economic policies of Trump may increase over time growth, reduce inflation, being overall pro-business, keeping tax rates on capital and labor low, deregulating the economy, and things like increasing the production of fossil fuels and pushing down the prices of energy. Probably also this Dodge initiative over time may increase economic efficiency and so on. So those are the positives. And over time, they could increase growth, they could reduce inflation. But we know there are some sets of other policy. We don't know how much they're going to be implemented. They will increase inflation and potentially be stagflationary. In my view, tariffs are inflationary. Protection is the risk of an economic war with China. First, draconian restriction to migration, if not a mass deportation. If we have unfunded fiscal deficits and the promises imply $8 trillion of deficits additional over the next 10 years, that's going to crowd out growth by increasing interest rates, nominal and real, and the bond market vigilantes are going to wake up. If you try to disorderly weaken the dollar, that could be inflationary, and if you interfere with independence of the Fed. Now, I think on the positive side, I think there are a number of factors that are going to constrain the bad policies. One is market discipline. If you follow policy inflationary, then bond market vigilantes are going to wake up, bond yields are going to go higher, the stock market is going to correct, and he cares about the bond market, he cares about the stock market. Secondly, Fed independence. If he follows policies that lead to inflation, the Fed may not continue to cut rates next year, may even raise rates if inflation were to be going higher. And also policy choices. As you pointed out, on one side, you have people like Scott Bessent who want to escalate, de-escalate on tariffs, and others who are total trade hawks on trade and on China, like Peter Navarro. So it depends on the balance between who's going to be in power.
Let's unpack some of that and pick out tariffs. Big debate already so far this morning. You've heard some of it. Please weigh in. If it's targeted, could it be a good thing for the American economy?
Well, if it's targeted, I would say that the impacts on inflation are going to be modest, and maybe some of the reshoring that already is occurring is going to continue, and there'll be actually pressure on our trade partners to say, if you don't want tariffs, you have to bring more investment, semiconductors, autos, EVs, you name it, to the United States. So that's the escalate in order to de-escalate. But I would say the higher those tariffs become, the more there's an impact on import prices, the more there's an impact on inflation, and the more there is global fragmentation. There's also the risk, of course, of trade wars, of our trade partners retaliating against the United States. If that occurs, the impact on growth is going to be more negative, the impact on inflation is going to be higher. Depends on the size of these tariffs. If it's Navarro types of policies on trade, it's stagflationary. If it's escalate, de-escalate, maybe the impact on inflation is modest, and the negative impact on growth is also modest.
So some people are arguing that we're in this wave of deglobalization that basically reverses some of the disinflationary forces of the 3 decades following really the mid-'80s. I'm wondering whether that's actually true, whether that's what we're seeing, because there still is quite a bit of trade. It's just going different routes. And frankly, you could see that overproduction from places like China are going to lower prices in certain places, even if they don't in the U.S. if their wall's up. In other words, are we overestimating the inflationary impact on a dramatic level of a lot of these tariffs?
Well, the impact of high tariffs on the United States would be inflationary. But if you think about the impact on growth and inflation in the rest of the world, will be disinflationary. Because if there is a shock to the demand for the exports of Europe, Asia, China, then there'll be excess supply. Growth is weakened in those parts of the world, and that leads to disinflation in the rest of the world. So the impact on the U.S. of high tariff is inflationary. The impact on the rest of the world is disinflationary because of excess supply.
You used to be called Dr. Doom. Are you retiring that mantle?
I always said I'm not Dr. Doom, I'm Dr. Realist. There are plenty of upside in economic growth. And by the way, some of them I think are more secular. I think the impact of technological innovation implied that potential growth in the US by the end of the decade could be close to 3%. And the fact we already have seen for the last couple of years growth of 2.5 to 2.8% with inflation falling is a sign that maybe productivity growth is increasing and potential is increasing, and we can grow faster with having lower inflation. So I'm not Dr. Doom.
Well, when it comes to tariffs, just to go back to this idea of the personnel, we know what Jameson Greer as well thinks about China. In hearing it to Congress, he had talked about strategic decoupling. Do you expect that over the next 4 years between Beijing and Washington?
Yes, I do. I think that one of the biggest risks is not just tariff in general, but a broader economic war against China. If listen to the long list of complaints of the Trump administration, they say China's been free riding on international trading system, tariff, non-tariffary barriers, government procurement policies, FDI policies, intellectual property rights, and of course fentanyl and lots of other things. And also geopolitically, there may be an attempt to try to contain the rise of China. So the biggest risk is not just tariff on China, but how much the overall policy toward China is going to be confrontational. And if they feel that we're trying to contain the rise, they could become quite aggressive themselves.
Well, front page of the FT today is talking about these 4 government-backed authorities that are telling local chip companies that you can no longer buy silicone from the United States. They're no longer safe or reliable. Are we already in this moment you're describing?
Well, certainly in anything to do with high tech, we've started already in the Biden administration to be in a process of decoupling, restriction to exports both of semiconductor and semiconductor equipment, restriction to anything that's related with AI and high technology. Under Biden was a narrow yard and high fences and stuff that was supposed to be critical. So de-risking, I think that in the case of Trump administration, we may move from de-risking with China to decoupling with China. There's something much more severe.
Does Europe need to pick a side?
They'll be in a very, very tough position because geopolitically, Europeans are close to the United States, NATO, and so on, but they do a lot of trade and investment with China. Under the Biden administration, it was easier because there was a compromise within the G7 about de-risking as opposed to decoupling. If the U.S. goes towards decoupling and says Europeans have to follow us, otherwise there are consequences, not just on trade, but also on NATO, security, and you name it, then I think Europe is already weak, will be in a tougher spot.
How much worse could things get for the Europeans? We've been saying through this morning that France is ungovernable at the moment, which means it can't deliver reforms. And in Europe, things have to get worse before ultimately they find solutions. How much worse does it need to get?
Well, things are really pretty bad already in Europe. I think that potential growth is below 1%. In Europe, Europe is going to be in the Eurozone less than 1%. next year. So, and structural reform are not going to occur anytime soon. There's a fragmentation between these 27 countries. Some of them want more integration, some of them want less. At the core of Europe, Germany and France are going to be politically unstable. So I don't see either the Letta report or the Draghi report for more integration, for a common market, for more productivity and competitiveness being implemented. So it looks pretty dark for Europe right now.
Which is the reason why I'm surprised that so many people come in and they say it's priced in. We don't really see a path out of here. We don't necessarily see an economic engine or the political will or capability to really counter it. At what point are we facing off with a potential dollar shock? And I ask this because, yes, the euro is likely to stay around here a week and further, but what if it actually weakens dramatically as the ECB is forced to cut rates and that divergence widens?
Well, there are many good reasons why the dollar may continue to strengthen. One is, of course, tariff. If they reduce the trade deficit, it's going to strengthen. Two, Trump had said, I want to have actually the dollar at the center of the global reserve system, and therefore that implies you want strong dollar than a weaker dollar. Relative growth differential, relative monetary policies, the fact that the U.S. is innovating and capital is flowing into the U.S. capital markets and the stock market all imply that the dollar over time should become stronger, the euro and other currencies should become weaker. The problem, however, is that Trump says a strong dollar has led to deindustrialization, to American carnage, people free riding on us, to having large trade deficit, and we want at some point a weaker dollar. The fundamentals imply a stronger dollar, but policy that may be an attempt eventually, maybe in the second half of the administration, to find an agreement on currency, maybe to say either you accept 10% tariffs or you accept a 10% depreciation of the dollar. I would not rule out there'll be some big Mar-a-Lago agreement. These FX agreements are always in a resort. Bretton Woods,
and Mar-a-Lago Accord,
Plaza, Louvre, and so on. So a Mar-a-Lago Accord is something that they're going to think about. Not in the first 2 years, but down the line, they're going to say to the trading partners, you don't want tariffs, you have to do other things for us.
We'll pick up on that story
currency
in just a moment. We'll talk about the currency market and we'll talk about Bitcoin. Bitcoin through 100K. Nouriel Roubini on Bitcoin in a few moments' time. Nouriel Roubini Macro Associates will be sticking with us. Let's take the opportunity to get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. The search continues for the man who allegedly shot and killed United Healthcare CEO Brian Thompson. Police say Thompson was specifically targeted in the attack, but they do not yet have a motive. Thompson's wife said that he had received threats before he was killed. Police are offering $10,000 for information on the case. Shares of Dollar General rebounding to 2.25% after selling off earlier when the company reported third quarter earnings that fell short of estimates. The discount retailer also cut its full year guidance. The results do highlight ongoing difficulties at Dollar General, which had brought back its CEO last year to focus on simplifying operations, but those shares are down 40% already this year. The makers of cognac and champagne are ramping up efforts to ship their products to the U.S. ahead of President-elect Donald Trump's potential tariffs. LVMH has increased consignments to the U.S. for its Hennessy brands, with intentions to do the same for its champagne label Moet and Chandon. One source says that Hennessy had already increased its shipments by about 10% annually. And that's your brief, John.
Just a rush to secure DP. I get it. Dom Perignon, really quickly, get a case
DP.
Just before the tariffs come.
Really? DP.
2012.
Is that what
nice
you call
vintage.
it in your house?
No, I was nodding.
I know.
He knows.
John once served
He
this
knows.
vintage bottle.
Yeah.
It's true. Up next on the program, talk about real things. Trump's team preparing to hit the ground running.
The big things that are going to move the markets next year are probably going to be immigration, tariffs, and fiscal. Fiscal is going to remain loose. Immigration numbers are going down. And on tariffs are going up. It's still possible and probably likely the magnitude of each of those things ends up being higher than anticipated.
That conversation up next with Bitcoin, a record highs through 100K. We're up by more than 5%. We'll get Nouriel's thoughts on that in just a moment.
spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity futures right now just about unchanged on the S&P 500. Bond yields just a little bit higher, up 2 basis points. The 10-year pushing 420. Under surveillance this morning, Trump's team preparing to hit the ground running.
The big things that are going to move the markets next year are probably going to be immigration, tariffs, and fiscal. Fiscal is going to remain loose. Immigration numbers are going down. And on tariffs are going up. It's still possible and probably likely the magnitude of each of those things ends up being higher than anticipated. Tariffs are Trump's favorite tool, and directionally they're going up. That shock is probably the one that could be the largest next year that's not priced in right now.
So here's the latest this morning. President-elect Donald Trump adding to his economic team, picking former Commissioner Paul Atkins to lead the SEC, also naming Peter Navarro as his top trade advisor, with Michael Faulkender to serve as Deputy Treasury Secretary. Bloomberg's Jack Fitzpatrick joins us now from Washington. Jack, welcome to the program. Is there a common thread between these selections?
Yeah, I think there's 2 common threads. One is deregulation and a conservative outlook, and 2, a history with Trump and loyalty to Trump. You look at Paul Atkins, obviously on crypto, generally on the SEC's portfolio. He has a much more of a focus on deregulation than Gary Gensler. That's a sharp turn away from the Biden administration's approach. Navarro, clearly a history with Trump, someone who declined to comply with a subpoena from the House January 6th committee and served 4 months in prison. Michael Faulkender, also someone with a history with Trump, serving in the Treasury Department in the first term, had a significant hand in the PPP loans in the early stages of the pandemic. So a conservative outlook and a history with Trump and a loyalty to Trump, I think, are the main takeaways from the recent picks.
Jack Fitzpatrick down in Washington, D.C. Jack mentioned crypto. Let's talk about Bitcoin. Bitcoin pushing 103K, up on a session by more than 5%. Nouriel Roubini is back with us. Nouriel, you've had a big move in Bitcoin over the last month or so. Had a big move over the last several years. Have you rethought the way you think about what's happening here?
Not really. I mean, people talk about Bitcoin being a cryptocurrency like the other ones, but they're not really currencies. They're not a unit of account. They're not a scalable means of payment. They're not a stable store of value. They're not a single numeraire. Bitcoin in the past went to 17 down, then to 16. Now it's above 100. You could have another 50% correction. So it's a speculative asset like meme stocks, SPACs, and others, highly volatile. Many people are going to it, but take El Salvador. They force everybody to use Bitcoin as legal tender, and less than 1% of all transactions are occurring in Bitcoin. So I don't think it's going to ever become a currency, but it's going to be a speculative asset.
One thing the dollar is depreciated against is Bitcoin. And I think this is where I would see some separation between what's happening with meme coins and meme stocks and what is happening with Bitcoin. There seems to be a preference. There are market participants who believe that this is a place to be if you're worried about the depreciation of the US dollar and a fiscal trajectory of the United States of America. Do you see a case for it there?
Not really, because actually when the Fed was essentially rising rates and inflation was higher, Bitcoin was falling, like in 22, as there was the stock market correction, and now the stocks are going higher, and the Fed is easing, and inflation has fallen, Bitcoin is going higher again. So historically, it's not been a hedge against inflation. Actually, it looks like it's highly correlated positively with stocks, a beta relative to the equity market. So it's not a traditional like hedge like gold that is in periods of time of inflation rising or debasement or worries about the dollarization. So it's something to me looks like speculative asset is highly correlated with equity. So it's not a hedge against inflation.
You say sort of parallel tracks to meme stocks and some of the other euphoria that we've seen. At the same time, there seems to be something more concrete behind this. You mentioned gold, and we are seeing that rally in gold in tandem because of what John is talking about, that store of value outside of the US dollar to protect against some sort of loss of fiscal dominance. Do you see, with a more institutionalized structure endorsed by a presidential administration, there being a case for at least a crypto-based store of value that could offset some of the risks of volatility in the dollar and the potential loss on the margins of fiscal dominance down the road?
I'm not sure, because if you're worried about inflation, debasement of fiat currency, or even the dollarization, there are plenty of other assets that provide a good hedge. Short-term treasuries, tapes, oil, ag commodities, gold, precious metals. So it's not as if there is not other alternatives. And as I pointed out, in the last few years, when inflation was higher, actually Bitcoin was falling, and when inflation has fallen, Bitcoin is going higher. So it doesn't look like it's been actually negatively correlated with inflation. So it is a speculative asset. For some people, it is a store of value. But if you want to hedge yourself against inflation, I think there's a spectrum of variety of other assets that are backed actually by real income or something, store of value, that are a better hedge against some of the risks that people worry about.
But given the change of tone in Washington, do you think there could be retail adoption at any point?
Yeah, and there's already been retail adoption, but my worry is actually that the regulation on crypto might become looser like they were before, and then you have another speculative run, you have another sets of scams like FTX, SPF, and so on, and then you get another bust. So the risk is we're going to go towards very little regulation. We know there are lots of players in this space that are quite shady, and the lack of regulation actually leads to a bigger bubble and a bigger bust down the line.
Known you a long time. Just want to finish up with something positive. Looking out to 2025. Favorite region right now? Favorite economy? The place you're most optimistic about for next year? Which one?
It's a bit consensus, but I think the United States still is going to outperform, both in terms of economic growth and equity markets, yes.
Seems to be the one place to be. Hear it repeatedly, don't we? The United States, it keeps coming back to America.
It feels like TINA. This is the TINA trade. There is no alternative at a time where essentially growth is concentrated in the world's biggest economy, and maybe it's trickling out, maybe it's not, but nonetheless, you also have yield here.
Nouriel, it's good to see you, sir.
Great.
Thanks for catching up with us. Thank you. Nouriel Rabini there of Rabini Macro Associates. Bitcoin right now up by 5% and pushing 103K. Up next on the program, Eric Resnick of KSL Capital Partners on job strength in the hospitality sector. As we count you down to more jobs data, jobless claims about 1 hour away, and then tomorrow it's the big one. It's Payrolls Friday. The estimate in our survey around 220 through the week so far. The estimate currently is about 215. From New York, this is Bloomberg.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Equity futures right now, 2 hours away from the opening bell. Just about negative by not even 0.1% after closing at another record high in yesterday's session. On the Nasdaq 100, we're down by close to 0.1%. With 2 hours until the opening bell, with your morning movers, here's Manus Cranny. Good morning, Manus.
Jonathan, good morning. I see you couldn't shift Nouriel off the idea about the investability in crypto. Crypto is on fire. Bitcoin is lit up like an inferno, breaking through that 100,000 barrier. This is just a personification over at Coinbase. What will Paul Atkins do? Is he going to have the opportunity to reduce the enforcement actions? Will he really unleash new animal spirits that can drive even more money into the ETFs and onto the exchanges? $32 billion so far this year has gone into the ETF world. And crypto is up, well, I should say Bitcoin is up by $1.3 billion since the Trump election. Have a look at the software company Synopsys. I think this is interesting. Electronic design for automation software. Yes, they're talking about double-digit growth for next year, but the reason we're down by nearly 9%, the CEO says it is a tale of two markets. The AI build-out is like a rocket ship rolling away, but the reality in the rest of the semis world for them is just doing fine, and doing fine is just not good enough. So this is about a temperance on the guidance. Yes, they're going to make a balanced growth outlook, 11.5 to 12.5%. That's tailing off from a growth rate of around 15%. Five below, this is about a new CEO and an upward momentum in guidance. We're going to get Winnie Park, former Forever 21 CEO. KeyBank says merchandising, marketing skills, background, the perfect kind of fit. JP Morgan up the stock to $110 in target from 83. You got Guggenheim, Morgan Stanley. Guggenheim at 140, Morgan Stanley at 120. So it is about the holiday season being off to a good start as well. Five below. Jonathan, good morning.
Manus Cranny, good morning once again. Enjoyed that, thank you. We'll catch up with Manus in about 60 minutes from now. Under surveillance this morning, President-elect Donald Trump announcing more key economic picks for his second term, including Paul Atkins for SEC chair and former Missouri Congressman Billy Long for IRS commissioner. Finance professor Michael Falkender, who served during the first Trump administration, is his pick for Deputy Treasury Secretary under Scott Bessent.
So I think getting more of the names and personnel's policy, you can see playing out what Terry Haynes described as a cabinet of rivals. You're going to have the likes of Peter Navarro, Howard Lutnick, Jamieson Greer versus Kevin Hassett, Michael Falkender, and Scott Bessent when it comes to this idea of tariffs. What I would say, though, amongst these new names in the economic space, they don't look like they're going to have the same kind of hurdles in Congress in terms of getting confirmed with some of his other picks. We're still waiting on what's going on with his defense pick, Pete Hegseth.
Which speaks to Scott Bessent, because the Treasury Secretary was meeting with the incoming Senate Republican leader, John Thune, just yesterday, both coming out of the closed-door discussion, emphasizing a willingness to work together. Bessent hasn't really raised any red flags whatsoever from GOP senators over the last few weeks.
No, Scott Bessent is going to really it's going to be very smooth, and he's going to glide through the Senate confirmation hearing, but he is being quiet. He's being quite direct to reporters, but not saying a ton, not giving a ton of details when he's coming out of these meetings, want to keep it behind closed doors. You know, people in the Trump camp call him that he has some sort of chilly charisma, and I think that's what he gave some of the journalists waiting outside John Thune's office yesterday.
What does that mean? Are they saying he's cold? I've met Scott Bessent a few times. There's nothing cold about him. He's quite a warm guy.
Chili charisma?
Chili charisma.
It's
Chili
basically
charisma, yeah.
competent, but not necessarily caving to the requests.
So he's being cold with journalists.
Yeah, exactly.
Chili charisma. He's charismatic, but he's not taking it over the line when maybe some others that have been named in Trump's cabinet have.
Got it.
He's
All right,
not-
I think I've got it. Anyway, if you've
He's
got
not
it-
Howard Lutnick.
He's not Howard Lutnick.
Yeah, so that's basically the
Bingo.
If that's the bar for charisma,
Exactly.
like, we're all miserable.
Oh, 100%.
Right?
Just chilly.
Okay, Bitcoin, exuberant. Through 100K for the first time on the back of Trump's selection of Paul Atkins as SEC chair. The digital asset industry optimistic that Trump will pursue crypto-friendly policy and hold tough government scrutiny.
Basically, if you liked crypto yesterday, why not love it today? And it seems like this 50% rally that we've seen in Bitcoin just is a momentum trade that nobody wants to get in front of. I think Nouriel's point's really interesting. If you start to get less regulation, what is the risk of a potential further escalation, further euphoria, and then some kind of bust with potential malfeasance under the hood? I mean, are we going back to NFTs? I'll create one.
INET didn't like that period at all. I think this could be something else. Potentially. Look, global markets are on fire this year, and Bitcoin's a big piece of that as well. I actually got a message as Nouriel was speaking saying, please point out to him that it's correlated the most to global liquidity. And that seems to be the story of the last year.
And you could make the argument that historical precedent doesn't necessarily tell the future story if you're talking about a regulatory regime change and if you're talking about a nascent asset. I mean, it's sort of this question of Amazon and how long did it take to become profitable before suddenly, you know, really hammering that home and dominating an entire industry. So a lot of question marks here. I'm not one to throw cold shade on Bitcoin. In fact, maybe I need to buy a Bitcoin at $103,000.
I'm hearing the same arguments against it that I heard at 10, 15, 20,
Correct.
25, and the whole way up over the last few years.
I'm humbled.
Market's very focused on one thing tomorrow morning, and that's the payrolls report, with the hospitality sector coming into focus. Bloomberg Economics writing the following: as this sector has been the biggest drag on headline payrolls in past Novembers, we think underperformance here will be a major factor in a disappointing headline print. A man who has to manage the hospitality sector is Eric Resnick, the CEO of KSL Capital Partners, which invests in travel and leisure. He joins us now for more. Eric, good morning. It's good to see you.
Good morning, John. Great to see you all today.
How are things going? You manage in a hospitality sector. What does the labor market look like at the moment?
Well, if you step back, we're the largest private investor in travel, solely focused on travel. We believe in the world. We have about 25 billion assets under management. 2/3 of that's in equity, a third in credit, and we employ about 50,000 people. So when we look at that, I realized that in October there was comments on the softness in leisure hiring. We don't really see that. So it's there's been, I think, a resurgence of consumer confidence post-election when you alleviate the uncertainty around the presidential election. And so we're seeing bookings strong when we look into 2025. So I anticipate that whether the November jobs report is strong or not, I suspect that you'll see increased hiring as we look out over the next few months.
Before we continue, you mentioned the sort of uncertainty around the election and that affects travel. Can you explain why? Because none of us can figure that out. We've been trying to understand this, is that there's an election coming up, so I better just stay home.
I was hoping you could tell me. It's an odd thing, but we see it most. This is not specific to this election. Often in presidential elections, right, ad spending goes up, and generally consumers become a little less confident. I think it's just the basics of uncertainty is unnerving. Unnerving is less confidence. Less confidence, you don't spend as much, and travel's a place. In that circumstance, you tend to delay a little bit. So we saw a little bit of a softer third quarter and fourth quarter bookings going into the election. We've seen it rebound since. And when we look to 25, bookings are up. For us, advanced bookings are up about 15%. So we're very excited about that. But it is odd to me. I can't give you an answer. I wish I knew.
So when you talk about hiring, and I do want to stick on that because that's one of the key components of people's confidence and their ability to keep going and traveling. How much easier is it to hire people now? I remember a time post-pandemic where it was incredibly difficult and you couldn't find people. And in order to find somebody, you had to find someone who didn't work very hard and pay them $30 an hour after paying them $15 an hour. How different is it now?
It's very different. I mean, I'd say, look, zooming back, what was $15 an hour, like you mentioned, is probably more like 20. In big cities, it's more. But if you look across the industry, I would say it's gone 15 to 20 over 4 or 5 years. So that's still meaningful wage inflation. That has helped. So right now, we are staffed well above levels that we're typically staffed at this time of year in terms of the pace of hiring for us going into the winter ski season. So we are basically 95% hired across Altera Mountain Company and the Icon Pass, which is our ski pass that we created about 7 years ago.
He's catering to me. Go on.
Right, looking straight to you.
Yeah.
over that time period, we've seen a dramatic ramp up in demand for skiing, and hiring this year has gone easier than it has probably any time since pre-pandemic.
Which raises this question about how sustainable this is going forward. And I don't want to get gloomy because this is all very positive and vacation plans are something that we all want to make. But I am curious about whether you're sort of getting to this place where what we hear from companies is that consumers are pushing back against price increases.
I think that's true.
They don't want to pay that much more. Hiring is pretty easy. People are plentiful in terms of availability, not demanding that much more. Does this speak to a moment that in the past, over your decades in this industry, have been tipping points where things start to not be quite as good?
I think that the rate of growth, which was robust coming out of COVID, has now stabilized to a more normal rate of growth. There's no doubt about that. I think we also see that the more luxury end of the market is growing faster than the lower end of the market. This past year, you've seen 3 or 4% RevPAR growth in the luxury end of the market. You've seen a couple percent RevPAR decline in the economy end of the market. I think that speaks of a bit of what you're going after. There is some pricing fatigue out there. I think the consumer's willing to pay at all ends of the market. They're willing to pay for service. You have to execute against that. If you don't execute against it, you're going to be a net loser in that industry in terms of market share. So for us, we try to be an employer of choice that helps us on gaining effectively market share of the labor market, and we try to be I'll try to also provide choice to the consumer, value to the consumer in terms of high-end service, so that they feel like while they're paying more for their vacation, they're getting more as a result. And so if we get that equation right, I don't think there's any inflection point that we're at now that's negative. I think we're in a 60-year cyclical trend of people spending more towards experiences over material goods.
When it comes to employment, though, how are you thinking about potential change of policies and the crackdown of illegal immigration by the incoming Trump administration, and what that could mean for the supply right now in the market?
Look, it's a relevant issue. Again, for us in our industry, legal immigration policies are very important, and creating vertical pathways for often legal immigrants and people getting their first job and giving them an opportunity to grow their careers over time in the leisure and hospitality industry, we think is a wonderful opportunity that our industry provides. Now, we take very seriously making sure that our employees are legally here, and I don't think there's a broad issue in our industry in that regard, but certainly anything—
Not in the industry, but the knock-on effects.
There is a knock-on effect. We'll see what happens. There's talk and then there's action. Certainly, we can't predict exactly what's going to happen. If there were something that resulted in a meaningful pullback in that kind of entry-level labor market, that would certainly have a knock-on effect, as you mentioned, Anne-Marie, in our industry. But what we have shown, that could be inflationary. If there's less available labor, it could be inflationary on wages. If that's the case, we've shown in our industry that we're very resilient. Just looking back to COVID, we were able to manage through a period of rapid inflation and come through that actually healthier than we went into it.
Post-COVID tourism flows have shifted, though, and geopolitics has been an element in that. Russian tourism has disappeared in certain places. The Chinese tourist was very slow to come back into the United States for America as well. What are you noticing with regards to that? Where's the tourism coming from? Where's it going? Where do you want to be? Where do you want to have a property?
Well, I can't give you a specific answer on prospective investments, but what I would say is Indian tourism is way up. China is down. Middle Eastern tourism is up. Russia is down. American tourism to Europe is up. European tourism to the U.S. has come back actually quite robustly. Japanese tourism is down to the U.S. Chinese tourism, or actually all tourism to Japan, is up. Currency flows, macroeconomics all come into play there. We think of those as short-term trends, generally speaking. When you look over the long term, fundamentally, we think that global tourism, global travel flows, if you will, all generally are pointing up and to the right. But yes, everything you said is true. For us, we're looking for those unique destinations that have broad appeal. Ideally, a place that we can take a consumer, if they haven't appealed to the Indian tourist, how do we create more appeal so the Indian tourist that's growing will come to our new destination? Maybe that's in Italy, maybe that's in the U.S., maybe that's in our resorts in the Maldives, just as one example. But I wouldn't say that we're particularly concerned about that. We've never, where the where the trends are weaker. We've never had a lot of Russian demand, for example, at our properties. But yes, you are right. When we look at markets like Courchevel in France, just as a consumer, the Russian travel to that market is down materially over the last several years.
So I know you can't talk about prospective deals, but you can talk about the type of deals that you are interested in, and you had been focused much more on debt. Now you're much more shifting your focus to equity investments. Why?
Well, I wouldn't say it's a shift. It's more, if you look back last year, a typical year we deploy about $3 billion of capital, half in debt, half in equity. In the last year, credit debt was up 50% and equity was down 50%. And that was simply a symptom of a big bid-ask gap between buyers and sellers on equity, offset by a tremendous amount of refinancing demand combined with bank pullback on the credit side. Looking forward, we still see same trends in credit, but on the equity side, we see real reason for optimism. We see NDAs that we've signed increasing. We've seen initial conversations with banks and sellers increasing going into 25. Debt availability is there, so that helps finance acquisitions. Interest rates are down 75 basis points, hopefully more coming. So all of that bodes well for the equity market as we go into the first half of 25. It'll take a quarter or two to play out.
Just before you go, I am an amateur hotel and restaurant critic. Congratulations.
I'm aware, yes.
Il Sereno, Lake Como. Fantastic property.
It is a fantastic property. I highly recommend it. The self-drive boats there are fantastic.
I did that. The mini Riva boats. It's a beautiful thing.
They are a wonderful thing.
Amateur restaurant.
Thank you for being one of our past guests.
Anytime, sir. Anytime. Eric, thank you. It's good to see you.
Thank you. Great to see you all. Appreciate you having me on.
Eric Resnick there of KSL Capital Partners. For those of you wondering, I paid full price. Let's get you an update on stories elsewhere this morning.
We appreciate that.
With your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. President Emmanuel Macron is searching for a new prime minister after no confidence vote against his government was passed, ousting Michel Barnier. Macron needs to find a prime minister who can pass a 2025 budget through a deeply divided parliament. Bloomberg's Francine Lacroix sat down with Marine Le Pen earlier this morning, and we will bring you that interview at 8:45 a.m. ET. U.S. business executives are more optimistic about the economy and their business after Donald Trump's presidential election victory. 2/3 of execs polled by the Association of International Certified Professional Accountants said that they are confident about the economic outlook for the year ahead. That's up from 26% from August and 43% from a year earlier. JetBlue is cutting more unprofitable routes, including flights from New York's JFK to Miami. It's also suspending services, some of them, to Europe. The airline says that it's refocusing on core markets, attempting to restore profits after a failed merger with Spirit and a block partnership with American Air. That's your brief, John.
Thank you. More from Danny in about 30 minutes' time. Up next on the program, next year's comeback trade.
Into next year, we actually see disinflation. We see a bit weaker growth. It might be a year of a comeback trade in terms of bonds.
That conversation up next, live from New York. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Ten-year government bond yields picking up just a touch. We're up by, let's call it 4 basis points now on a 10-year through 420, 421.67. Going into jobless claims later on this morning. That number drops in about 40 minutes from now. The estimate in our survey, 215. The previous week, 213. Under surveillance this morning, next year's comeback trade.
Into next year, we actually see disinflation. We see a bit weaker growth. We see earnings growth that isn't going to hit the bar of 15% next year. We see elevated equities and elevated bond yields. So you put all that together, we're tilting a bit more conservative. It might be a year of a comeback trade in terms of bonds.
So here's the latest. Market volatility and policy uncertainty pushing some investors back towards fixed income. Kathy Jones of Charles Schwab warning of a bumpy ride in 2025, but writing the following. Despite our caution, we also recognize that volatility can translate into opportunities. Higher yields potentially can provide investors with more income and stronger returns in the long run. We expect to find areas in the fixed income markets that can deliver solid returns in 2025. Kathy joins us for more. Kathy, good morning.
Good morning.
It's all lining up to be pretty good. Softening growth, moderating inflation, lower interest rates. That screams buy bonds. Is there anything that could change on the policy side that might disrupt that?
There's several things. Obviously, tariffs, which have been discussed many times, at least a one-time price level increase on those goods that have tariffs attached to them. So that's one thing. And then if you get counter tariffs and retaliation, then we could get into a kind of ugly trade war, which wouldn't be good. And, you know, immigration policy, if we really reduce the size of the workforce substantially through deportations or just limiting immigration, then we're looking at probably higher salaries. And shortages in some industries could be particularly acute, like construction, where housing is already very expensive. And then, you know, you look at tax policy. Now, that's probably a 2026 issue. But if we get, you know, more tax cuts with the deficit rising, that puts more upward pressure on inflation if we're still running at a pretty healthy economy. So those policies are all up in the air. We don't know the dimensions of them, but they're all a possible risk.
I remember when we were heading into the election, there was a thought of a red sweep was going to be catastrophic for bond yields, and you're going to see bond yields sell off dramatically, 10-year yields spike higher. What we've seen since the election is the opposite, actually, is we've seen longer-term 10-year yields come in. Do you think that that's a head fake? Do you think that basically people were worried about the wrong thing?
Yeah, I mean, it's really hard to interpret, you know, in a short time period what's driving it. We did get much stronger data as of September. Those revisions to the September data, you know, we looked like we were going into a real slowdown with lower inflation, and then all of a sudden the revisions to the employment numbers and all the numbers came in strong. So that was part of what drove us going into the election. And then I think there were some concerns, and now there's kind of relief. Well, we don't really have any dimensions to worry about yet because we don't know what they are. But we're sitting at relatively elevated yields if you think that the Fed's going to cut rates some more, as they've indicated.
I wonder if one of the most consensus trades of this year is going to get upended next year. And I'd love your thoughts on this and the idea of a steepening yield curve. That's what everyone's been sort of piling into because the Fed was going to be cutting rates and longer-term yields could creep higher on a relative basis. Are we looking at a reversal of that? The more that Fed officials talk about pausing and allowing this economy to run and taking their time finding neutral.
Yeah, it could slow it down. I do think steepening is still the logical outcome of what we're looking at because, normally you would have, 60% of the time, you would have the Fed funds rate about 100 basis points below the 10-year yield. And now, we're not there yet. And so as the Fed lowers rates, if they lower rates, you'd have 10-year kind of just sitting where they are, and that would be a reasonable outlook, and that's kind of our general outlook. But if the Fed goes much more slowly or stays here, that may be a signal that the economy is going to slow down more, financial conditions might tighten, and that actually might send us back into inversion. I don't think that's the highest probability, but it's out there.
When you think about next year and you're talking about the dimensions of all these policy proposals, how important is the sequencing for you?
Well, yeah, it is important. Our best estimate is that we get the tariffs first, and then we get some immigration, and then the tax thing is down the road. But in the meantime, we have the debt ceiling to fight over.
January 1.
Yeah, so we have to get through every hurdle. And I think we can deal with the tariffs if they're being used as a trade negotiation tool. If they're really widespread and as high as anticipated or has been discussed, then that might disturb the market quite a bit. But right now we're just concentrating on the debt ceiling, trying to get through that.
Working out how strong the appetite is for deficit spending next year is still pretty tricky. We've got the Tax Cut and Jobs Act of 2017 that needs to be extended. Then you've got things like tax cuts and tips, Lisa. Then you've got things like the SALT deduction as well. I'm not sure how far they're willing to go. I've seen very little sign of that whatsoever over the last few weeks. I understand it's early days and we'll find out more in the next few months, but certainly doesn't scream priority right now, that's for sure.
There is a sense of, I don't want to call it fiscal discipline, but a lack of willingness to be completely fiscally profligate among particularly the Senate Republican leadership. And that is where I'm looking. But it's across the board, pretty much, that you're seeing just on the margins a real eye toward the bond market.
But one or two representatives could tank this. What was Libby Cantrell talking about to us this week?
Everyone's
historically, this is one of the slimmest majorities they have in the House. So you have Congressman Lawler, who everyone's saying might run for governor. He wants SALT. If that's not in the package, well, he's going to be a no.
That's settled the bond market down, I think, in the past week or so. We'll see how this one evolves into next year. Kathy, it's good to see you.
Thank you.
Kathy Jones and Charles Schwab. I don't know if it's too early to say happy holidays yet or not. But we can
Why
do
not?
it.
Let's
happy
do it.
holidays. It's good to see you.
Christmas trees are out on all of the avenues.
Hey, Bramo, my tree was up weeks ago.
So I should have started
If I came on
calling
the
happy
show saying
holidays.
Merry Christmas, you would have criticised me.
Okay, true.
Merry Christmas. Coming up, David Leibovitz of JP Morgan Asset Management, Evan Siegerman of BMO, Nita Richardson of ADP, and Leslie Falconio of UBS from New York. The third hour of Bloomberg Surveillance. Up next.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
David Weston,
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank.
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
We continue to think that this is an environment of transformation rather than an environment of your typical cycle.
Rates are still meaningfully above neutral.
Not only do you have fixed income concerns, but in equities, they're very expensive from a valuation point of view.
You still have those winners and losers, but I would say that there's more winners than losers these days.
We think you're set up for another double-digit return for next year.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
It's quite a finish to 2024. All-time highs in the equity market, record highs on Bitcoin, more all-time highs potentially in store by the end of today. Futures just about unchanged on the S&P. We've had 56 of them through the year so far. On the S&P right now, futures unchanged. On the NASDAQ, unchanged as well. In 30 minutes, you get some much-needed economic data. This time, it's jobless claims. Jobless claims, we're looking for a number around 215K, basically in line with the previous week, a very, very low 213. You'll get some more Fed speak. We've heard from Chairman Powell this week already. Called it a strong economy. And the headline numbers so far look pretty decent.
They've been an upside surprise after upside surprise, which is the reason why the U.S. Economic Surprise Index is near the highest levels going back to April. But it's not necessarily coming with a reacceleration in inflation yet. And I think that that's the reason why people think that the Fed is going to cut rates in a couple weeks' time by 25 basis points and then basically say, next year it's a black box and we're not going to say anything and we probably will pause.
Confidence is up since the election. Business confidence is up since the election. You see that in the Beige Book. Consumer confidence is up since the election. We've seen that over the last few weeks. Now it's about policy. It's about emphasis and it's about sequencing. And we've been saying that on repeat for the last few weeks.
We just heard from Kathy Jones, and she says they view the sequencing as tariffs first, immigration, then tax cuts. Well, what is that going to mean for record high after record high on the S&P 500? And when you talk to people, they say, yeah, potentially one of the biggest checks, Jonathan, you've said this, one of the biggest checks on Trump 1.0, likely going to be part of Trump 2.0, is the equity market. So the sequencing potentially have to change if he wants to keep the rip-roaring we're seeing in the markets, which isn't going to bode well for some of his policies.
Antitrust and regulation is a key part of this as well. We just got numbers from Kroger, and as a headline here, reiterating their commitment to closing the Albertsons merger. Does that get easier with the incoming administration?
That's going to be an open question. Right now, markets are treating it as though it will get easier, considering that Lina Khan may not be heading the FTC. I do just want to point out, this is quite the set of headlines, because you do have them committed to closing the Albertsons merger to get bigger at a time where their third quarter sales came in a little light, and they narrowed the forecast going forward just a little bit into a little bit of the downside. And you look at this and you wonder, pairing it with Walmart, pairing it with some of the behemoths, do some of these companies have to get bigger in order to compete in a real way when consumers are feeling okay, but not amazing and not willing to shop at all times?
That's precisely the argument that they've been making over the last few months, and it's falling on deaf ears with this administration, and we'll see if that changes in the coming months.
And whether there is some sort of immediate response to that, I will just say, if there is more of an acceptance of that, how much of a rush of M&A can you expect to see, given that this is the argument that a lot of places have been making for the past couple of years?
When it comes to antitrust, the two positions is the DOJ antitrust position. Jonathan Cantor will be out. We do have the name for that, and this is a J.D. Vance acolyte, the individual who said he thought Lina Khan was one of the few people, maybe the only one in the Biden administration, that he kind of liked what she was doing. When it comes to the FTC, for sure Lina Khan will be out. That is still a name we are waiting on to understand the economic personnel makeup of this administration. And while maybe they're going to be tough on tech, I imagine a grocery chain or a handbag operation M&A deals, I think those are going to be able to fly through.
The Kroger right now in the pre-market is negative by something like 5%. Coming up this hour, we'll catch up with David Leibovitz of JP Morgan, with the S&P 500 on track for its best year in 5. Evan Siegerman of BMO as Eli Lilly clinches a victory in the weight loss drug market. And we'll catch up with Nita Richardson of ADP, reacting to jobless claims, which drop in about 25 minutes' time. And we'll look ahead to payrolls tomorrow morning. We begin this hour with stocks at record highs as investors look ahead to a 24 hours full of jobs data. David Leibovitz of JP Morgan embracing a risk-on mood. From a portfolio perspective, we continue to embrace risk, but have been increasingly focused on the composition of that risk. High-yield valuations are rich, and we have taken some gains redeploying this capital in small and mid-cap U.S. equities. David joins us now for more. David, good morning.
Morning, how are you?
Let's walk through that switch. I'm good. Why go from credit to equity? What's behind that?
So when we looked at the move in spreads following the election outcome and we came down to 265 and then 255 on U.S. high yield, we said to ourselves, we feel like this is a trade where the return potential has been capped. I mean, all things considered, a 7% yield to worst is nothing to shake a stick at, particularly with a third of the volatility of the S&P 500, but you're limiting your upside there. And given some of the things that you all were just talking about around deregulation, tax cuts, so on and so forth, we wanted to lean more a little into the equity side, one where valuations are more attractive than the Mag 6, but also where we think there will be a direct benefit from some of the policies that will come through starting next year.
Small caps, double-digit gains for the month of November. What is underpinning that move? What do you think are the big themes that people are getting their hands around?
So I think that there are a couple of things going on with small caps. First of all, small cap companies primarily finance themselves with floating rate debt. So the idea that the Fed is going to continue easing, probably not as much as markets were thinking earlier this year, but I do think that there are still a few more cuts ahead of us. That's going to help their profitability right off the bat. At the same time, you're looking at a nominal growth environment that may not accelerate from where we are, but should remain well supported, and that can help both top and bottom lines. And then finally, the third thing just being the underlying sector composition of that benchmark. You have a significantly larger weight in things like financials and specifically the regional banks, which if we get some deregulation in financial services, which does seem likely, they're going to be the direct beneficiaries of that trend.
So at this point, are you basically saying that equities look a lot better than anything in the debt space, even when it comes to riskier debt instruments?
So I think that it's a function of going underneath the surface in things like high yield. And when we put our overweight to high yield on earlier in the year, that was really predicated on the idea that CCC rated bonds would see significant spread compression. That's effectively what we've seen. That's what's driven the index level spread to such a low level. And, look, could we end up at 230, 225 at some point down the road? Absolutely. And we also recognize that when spreads are low and tight, they can stay tight for extended periods of time. But it feels like, particularly with some of the conversations around animal spirits, we just want to have more exposure to the upside than things like U.S. credit were really giving us.
Does it worry you that everyone's on the same side of the boat right now? I mean, honestly, person after person, everyone's talking about euphoria. They're getting even more risk on. How do we get even more risk on? Because honestly, we weren't as risk on as we probably should have been 2 months ago. When does it become a problem?
So the the bulls are definitely on parade, but I think that the unique thing, and John Authers mentioned this in his note this morning, is you look around the world and where else are you going to go? I mean, the profitability of U.S. companies is unlike anything else that's available in the global equity market. Furthermore, and this is a point he made, 2/3 of the global equity market is the U.S. So if you have less than 2/3 of your portfolio in U.S. equities, you're effectively underweight what's been working so well. So that's not to say that there won't be a broadening out at some point down the road, but when we think about what's been discussed on the campaign trail and we think about what Trump 2.0 might bring to the table, it's not a long-only U.S. trade, it's a long-short trade. Long the U.S., short the rest of the world, because some of these policies, particularly tariffs, are going to be punitive for other countries.
Right, so the walls are going up and you want to be invested and invested big in America. What do you make, you're talking about animal spirits, what do you make of what's going on in crypto right now and what's going on in Bitcoin?
So I think that there are a couple of things going on with crypto. One, I think that generally the risk-on environment has supported Bitcoin moving north of 100,000. I think the other thing that's going on is that when you look at what's happening in the US, you look at what's happening in Europe, you look at what's happening in Asia, fiscal spending is very much a part of the conversation, whether it's China or Germany easing off the debt brake or what we're going to get here in the United States. And I think that this reflects some concern that over time government spending could go too far. So it's not a different conversation from the one that we've had, over the past 10, 15, 20 years, the debt's too high, the deficit's too big. But at the end of the day, if you're seeing this, another way that people can play that through their portfolios are through things like crypto. So they arguably just have a different lever to pull than they did a decade ago.
Is now the time to put some money in places like that, and gold and Bitcoin?
So, I mean, the trend can be your friend for an extended period of time, and momentum investing has certainly worked well in 2024. Frankly, I would be a little bit cautious there. I think a lot of this is going to come back to what the Fed does in 2025, and we do think that the Fed will cut again in December. I think that they probably fall into a quarterly cadence in 2025, and maybe we get one or two. But then you're looking at U.S. rates that are still fairly attractive. And I think, some of the Bitcoin and gold continuing to rise, some of that, again, is dependent on rates coming down. And I'm just not sure that the people who are buying those assets, particularly in the retail world, have an appreciation for where rates may stop.
Bitcoin is rallying this morning. Here's another thing that's making a move higher. American Airlines, with a big rally in the pre-market off the back of this. Their outlook for the fourth quarter. Here's the range now. 55 cents to 75. The previous range, 25 to 50. We're higher by 7.6%. Lisa, it's not just them. It's Southwest, it's American, it's JetBlue. Yesterday we talked about that. The airline business into year-end looking better than expected.
Yeah, Southwest raising their revenue forecast because of the demand in travel. How much is this payback because of the post-election certainty? Just they have, there is a president-elect, and so therefore people can travel. Still try to explain that to me. I can't figure that out, but that's where we're at. What I think is interesting is also you see how some of the initiatives are paying off. With American Air, they've solidified their relationship with Citigroup as their sole credit card provider and are trying to get that alliance because all of these airline companies are really credit card companies. Then with JetBlue, they're trying to cater to a higher end customer, and that's paying off. So a lot of strategy shifts that are paying off at a time where everyone wants to travel.
Is consumer confidence back, David? Is it booming post-election?
So I think consumer confidence is coming back and could well continue to improve, but I come back to the fact that for a lot of people, inflation is still an issue. And it's not necessarily about the annual rate of change, it's about the cumulative inflation that we've seen over the past few years. If you think of common man inflation being food, energy, and housing, I mean, that's well above what you're seeing the headline CPI index at today. And so I think it will come back, particularly if we get tax cuts, particularly if we get some deregulation and markets continue to rise. But the inflation issue is one where I don't think we can signal the all clear, at least not quite yet.
That certainly speaks to the political shift in this country over the last month or so. David, it's good to see you. Great to catch up. David Liebowitz there of JP Morgan. American Airlines up big time in the pre-market. Equity futures still just about negative by not even 0.1%. With an update on stories elsewhere this morning with your Bloomberg brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. The search continues for the man who allegedly shot and killed United Healthcare CEO Brian Thompson. Police say that Thompson was specifically targeted in the attack, but they do not yet have a motive for the shooting. Thompson's wife said that he had received threats before he was killed. Police are offering $10,000 for information on the case. Elon Musk and Vivek Ramaswamy are headed to Capitol Hill today to meet with Republican lawmakers to discuss plans to slash at least $2 trillion from the federal budget. The two co-heading a new outside advisory body created by President-elect Donald Trump to cut costs. According to the FT, venture capitalist Mark Andreessen has been helping to recruit candidates for the so-called Department of Government Efficiency. And in sports, Liverpool were held to a draw against Newcastle despite 2 goals from Mo Salah. The Premier League's top team surrendered a tying goal in the 90th minute. The draw limits their lead over the second-place Chelsea to 7 points. Elsewhere, Arsenal defeated Man U 2-0 at Emirates Stadium, helping to close their gap behind Liverpool. The match marked United's first loss under the new coach Ruben Amorim. And that's your brief, John.
And that's why we did that in the brief, because Manchester United lost. Just for anyone who's wondering, because if you're a Liverpool fan, you might be wondering, well, what about every time we've won? Why haven't you talked about it? We drop points and it gets a mention.
Okay, honestly, now they're only a 7-point lead. Ooh, people are really concerned about them. I think they have to lose 2 more games to not win the whole thing or something of that nature. I mean,
That was amazing. Mohamed Salah's spin goal.
The guy needs a contract. What is going on at your football club?
The Egyptian magician?
Yeah.
I don't know.
Get the man a new contract.
What do I know about this stuff?
What's happening there? Up next on the programme, we blame you, Bramo, for everything.
Great.
The morning calls, plus Evan Siegerman of BMO. As the weight loss drug battle between Eli Lilly and Novo continues to heat up, as we count you down to the opening bell, about 1 hour and 15 minutes away, with equity futures here just about unchanged. The head of jobless claims in about 15 minutes' time. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
So we're getting closer to the weekend. You can tell I want to get to the weekend. We're getting closer to the weekend. 8:30 Eastern Time, jobless claims, so 14 minutes from now. And then tomorrow morning, it's all about payrolls. There is no other story. Going into that, equity futures just about unchanged on the S&P 500. No drama throughout the morning so far on the equity side. Plenty of drama for Bitcoin, another all-time high. In the bond market, yields bleed a little bit higher by 2 or 3 basis points. We're up to 420.51 on a 10-year. Let's get you some morning calls. First up, Citi raising its price target on Netflix to $9.20, citing more confidence in the company's advertising tier. That stock is higher by around about 1/10%. Your second call from Morgan Stanley, downgrading Applied Materials to underweight, saying the weaker operating environment for markets in 2025 will lead to a correction. That stock is down by close to 2.5%. And finally, Bank of America hiking its price target on Tesla to $400. Noting confidence in EV growth and robo-taxi capability, the rally continues. We're up another 0.7% in early trading. Let's turn to pharma. Eli Lilly's weight loss drug Zepbound outperforming rival Novo Nordisk's Wegovy in their first head-to-head trial. Even Siegerman of BMO saying the results were expected and could fuel modest commercial growth for Lilly as both companies focus on the next generation of obesity drugs. Evan joins us now for more. Evan, welcome to the program. Let's get to 35,000 feet if we can and just talk about the adoption of GLP-1s. Seems to have gone quiet over the last 6 months or so on our side. I'm sure in your world it's still very busy and quite noisy. Can you talk to us about the adoption and whether things have slowed or whether you're still seeing that really steep growth that we saw over the previous year?
Sure. So let's go back to 3Q results because that's where we saw a real bifurcation between Lilly and Novo. So Lilly indicated that they have enough supply. They're trying to drum up some demand, aligning with what you just described. Novo, on the other hand, still has some supply issues with their assets like Wegovy. So they're still working through that to meet this demand that they're seeing in key U.S. markets. You know, one thing that I want to highlight, let's talk about the SURMOUNT-5 data yesterday. That was largely expected. We know tirzepatide Zepbound is better than Wegovy, but now Lilly has that data. They can go out to physicians and say, yeah, ours is better. What's really important, though, and I'm sure we'll talk about it, is Novo has a data readout by the end of the year called CagriSema. This could be better than Zepbound. And people were kind of skeptical on this because it was going to have to be delivered in a dual-chambered pen. But yesterday, we found a trial posted on clinicaltrials.gov, which is the website for clinical trials, showing that Novo may have cracked a co-formulation of the acid. So a lot of moving parts, very exciting. I think fourth quarter will be very important because these companies got beaten up in 3Q, and hopefully will turn the tide for a stronger 2025.
Evan, when you say it's better than Zepbound, what's better about it? Delivery, performance? Is it more effective? What is it?
Great question. So weight loss. So analysts and investors are looking for weight loss of at least 25% of one's body weight by the end of a year. Zepbound does about 20%, so that's about a 5% delta. I know some investors want to see more than that. On the tolerability perspective, it should be in line with what we see with Zepbound. It might be slightly worse because you do have another drug in there, but it's that weight loss component is what we're really focused on.
Evan, how much is the real barometer, how much weight you lose and how much is it, you call it tolerability, not having a miserable life, not feeling like you have to, that you can't eat, just to put it that way. I mean, how much are you measuring this?
So that's very important because you are correct. When you are taking these products, you don't want to be nauseous. You don't want to have GI issues. Those do subside after time. They're usually associated with what's called the titration, so increasing the doses. But again, if you're doing that for 6 months, you want to feel good. So we do look at that tolerability profile. It is very important. But at the end of the day, it's that weight loss because folks, you don't just want to hit 12% if you really need the weight loss. You want to get to that 20-25%.
How much is the success of one drug or another contingent on the insurance profile? And we've heard about President Biden talking about how he would like to see weight loss drugs covered under certain government insurance programs. Is that sort of one of the key variables with some of these studies and the success of one drug or another?
So insurance coverage is obviously very important. For what it's worth, Lilly and Novo have pretty good commercial insurance for Wegovy and Zepbound. So that's insurance through, say, one's job, not Medicare. I think that's the X factor that you're getting at. Biden, I believe, last week or the week before had a memo out essentially suggesting that Medicare should cover these products for patients who are eligible and not just for something like a cardiovascular disease or potentially sleep apnea, which Lilly will have on the label by the end of the year. So I think that's very important because there are a lot of patients who are in Medicare and Medicaid who could benefit. That could be a nice tailwind, assuming that happens. Of course, there is some expense associated with that. I mean, we'll see what happens when you have a regime change next month.
Right, and RFK Jr. is an outspoken critic of these drugs, especially when they're used for weight loss. So how do you see potentially that proposal maybe being used or just totally dismissed by an incoming Trump administration?
This is getting complicated. Well, a few things. One, RFK won't be head of the FDA, which is good. Number two, these decisions are made by HHS, so that's Dr. Oz. I don't know what his exact views on GLP-1s are, but he seems to be a little more farmer-friendly, still a skeptic. I think what's key here is if the Biden administration can get this on board now, it's very hard to take away things from seniors once they have them. That's not very popular either. And remember, President-elect Trump is focused on his popularity as well, not just, satisfying someone like RFK.
Right, but he's also focused on cutting government spending, and we're going to see that take place today when Elon Musk and Vivek Ramaswamy go to Congress. And this would cost taxpayers, according to the CBS report, as much as $35 billion over the next decade. Do you really see? Drop in a bucket, maybe, but they're looking at anything to cut. Elon Musk is talking about $2 trillion in spending. So why would they add on something additionally that was teed up for them by an outgoing Democratic administration?
So a few things there. One, it's a drop in the bucket of what we spend on pharmaceuticals, $800 billion, $5 trillion in healthcare. I hear what you're saying, most definitely. I think what's key here is you actually get a lot of savings because you're saving elsewhere in the healthcare system, assuming patients are on these drugs for, a couple of years, 5, 10 years in Medicare. You're spending less elsewhere in Medicare. I'd also highlight that a lot of this is paid for by premiums in Part D, right? Part D is funded a lot by premiums for enrollees. So there is a government component, but it is some cost sharing as well. So yes, clearly Elon Musk and Vivek Ramaswamy want to cut government spending, but remember, cutting Medicare and Social Security, very unpopular. Again, going back to my earlier point on President-elect Trump's popularity.
Evan, just to sort of finish where we began, we talked earlier this year that GLP-1s would change the trajectory of equity markets and, frankly, of the healthcare system in the United States, that it would change the trajectory for food companies that would be selling less, given the fact that people had lower appetites. Why has that story gone away?
So I don't think the story has gone away. I think that there has been a bit of the wind has been taken out of the sails, shall we say. 2Q was good for Lilly. 3Q wasn't great. I need to see a good 4Q, and I need to see really positive momentum into 2025. I think that a lot of the low-hanging fruit, to use a terrible cliche, has been kind of picked already. So now Lilly and Novo need to go out there and continue to build the market. We're still looking at over $50 billion in sales for these products across obesity and diabetes for 2024. So it is still a very large opportunity and growing. So I think investors are always looking for what's next and what's hot, but this is still here in my view, and we need to see good posturing from these companies for 2025.
Evan, this was great. I enjoyed this. Thank you, sir. Evan Siegerman there.
Thank you, guys.
BMO on the latest. Thank you, sir. 40% of this country's obese. It's an uncomfortable conversation. You've got someone disruptive coming into the government who wants to talk about the causes and not just the symptoms. Look, I know that the negatives have been covered a lot for good reason. There are some positives here. You need to disrupt this story. It's a story ripe for disruption.
You're talking about RFK Jr.
I'm talking about obesity across the board in America.
And what's going to cure it? I think that that's sort of the discussion. Is it going to be going after food companies? Is it going to be promulgating the use of obesity drugs? Is it some combination of both? And is there the political will to have an honest conversation about what measures are necessary on a mass adoption scale? I think that's an important conversation.
The question is whether or not the Trump administration is going to take up this proposal. And it is going to cost money. I understand Evan's point there. Maybe you put the money in now and it'll save savings of potentially people that are obese and need help and that are relying on the Medicare system. Regardless, though, it's a proposal from an outgoing Biden administration.
I know.
It's going to be challenging, I think, politically to pick up.
Let's focus on the incoming administration. Congratulations, Bitcoiners, from President-elect Donald Trump. 100K, you're welcome. Is that a message?
You're welcome. He says together we'll make America great again. Well, I guess he's making Bitcoin great again.
Bitcoin approaching 103 through 103. From New York, more data up next.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
So we are 60 minutes away from the opening bell with equity futures at the moment just about unchanged on the S&P, on the Nasdaq 100. In the bond market, we're shaping up as follows. Following comments from Chairman Powell yesterday, who suggested once again this economy looks strong. We'll get some data in just a moment that might speak to that. Jobless claims just around the corner. Yields are higher by 2 basis points, in at around 420 on a US 10-year, on a 2-year up by 2 basis points to 415.23. With your economic data this morning, let's get across to Mike McKee. Good morning, Mike.
Good morning, John. A bit of a surprise in the jobless claims numbers, up to 224,000 from 215, basically a slight change up to the week before. There was a downside risk to numbers this time because last week was Thanksgiving. And so maybe some of the offices or people who were unemployed didn't get out to file. So we'll have to put this one aside in terms of a real strong signal on the economy and say we'll check into it next week or the week after as we continue on into the holiday season. These numbers get a little less reliable. Continuing claims fall 1,871,000 down from 189.6. So we're seeing some progress on people getting jobs. And the trade balance, $73.8 billion, significantly lower than the previous month's $84 billion. Well, 83.8 is the actual number. And it is lower than the anticipated number from the advanced numbers. So that is good news for fourth quarter growth.
Mike McKee, 215 is the estimate for tomorrow morning. We've been asking this question for the last couple of days. How strong is strong? Is 250 strong? Does it need to be bigger than that, given the bounce back we're anticipating from October?
I don't think any one number is going to move the Fed one way or another because they know there's going to be a bounce back and it's a little bit hard to track. Watch the unemployment rate, which isn't affected by the hurricanes or the strikes. That will be more telling for the Fed. If we get a really big number, you'll get a market reaction, and I've seen estimates as high as 300,000 or more because nobody really knows how to quantify the impact of the storms, although we did see state employment figures for the month go down in the 5 states that were affected. So it's going to be an interesting number, but not dispositive. I think you got to look to CPI and PPI next week for more of a clue.
Mike McKee, thank you. Small upside surprise on jobless claims here, 224. The estimate was 215. Going into tomorrow in our survey for the headline payrolls number, we're looking for 215, a big bounce back from that very small 12K for the month of October. With us around the table, Nita Richardson of ADP. Nita, good morning.
Good morning.
Good to see you. Good to see you. What did you notice about the ADP report? What was the big takeaway for you and the team?
Well, it was a healthy amount of job growth, but it was mixed. We saw a lot of weakness in manufacturing, and according to ADP numbers, dropped 26,000. That's significant. And also we saw some softness on the services side too. Things that had been strong, like leisure and hospitality, took a step back, just 15,000. Financial activities, you think they're positioned for all this merger and acquisition activity to come with lower rates. Again, hiring was lackluster in that sector. Large firms did the bulk of the hiring. We're used to seeing small firms outperform in certain areas of hiring. At least that's what happened in the recovery period. Now large firms are really basically owning the jobs market. And then the final thing, and this is the most important when you're looking at the Fed, wage growth went up. It went up. So that suggests a still tight market.
So you've got to tell me, given everything you said before the last bit, what's driving wages higher?
Yeah, so there's a tightness in the labor market in key sectors. It's not all growth. Remember, at ADP, we match individuals with themselves. So we're not as shaken by permutations in the labor market from month to month. These are people who have been in the job market over the course of the year. And for those people, they are seeing an uptick in their wage growth. The catch here, and this is important, is that it's still not keeping up with inflation for the average worker.
Yeah, but you said there are key areas of inflation. What are those areas at a time when I remember you said that statistics professionals were really in vogue as a lot of businesses tried to understand how to use artificial intelligence and where to invest. What is it now?
Well, first of all, it's long-term trends, which means healthcare. I just read that like 10,000 people a day have a birthday that takes them over 65 to 65. And so we are a retiring community. We are a retiring country. And in that retirement, we need healthcare because, health issues become more intense as you get older. So that sector is growing. And who would have thought that healthcare would be the outperforming sector? If you're looking at the labor market like the stock market, that is the value stock. It's healthcare. The growth stocks are not performing as well. So when you look at that statistician, information technology, when you're looking at professional business services, they're not growing as much. I think what we're seeing is that there are some emerging fields. I think energy and technology together are going to create a huge burst of job opportunities, but they're not flowing through the labor market quite yet.
How vulnerable do things feel to you? I mean, I ask this because a lot of the data is messy. I mean, we just got jobless claims ticked up a little bit. It's hard to know exactly how accurate from month to month some of this data is. There was a pretty big revision in the prior month, even in the ADP numbers. Are things feeling messier to you or less specific, or do you feel like you have a pretty good handle on things?
I think there's going to be two head fakes. One was in October, when we saw that really small number because of strikes and hurricanes from the BLS. The second head fake will be tomorrow. You're going to see a bounce back that won't tell the whole story of the labor market. The story of the labor market is that we're in a quiet period. There's not a lot of layoffs and there's not a lot of hiring. We're in this kind of stasis period. How long that quiet period lasts is undetermined. And what triggers it and which way, whether it goes up or down, still undetermined. So yeah, we're in a messy spot. I think you still see positive hiring that is healthy and can support this economy, but we're lacking the dynamism that really pushes us into the next century in terms of new technology. So I'm still worried about productivity. I'm still worried about softness in the labor market in key sectors like manufacturing.
Well, let's pick up on manufacturing. Donald Trump is talking about tariffs. He's already negotiating with the likes of Canada, potentially, about what those tariffs may look like on China, on Mexico. Is tariffs going to help the U.S. manufacturing base, or is it going to hurt?
That is really too soon to tell. Because, first of all, we should take a step back. Economics is not immutable. It's not like physics. It depends on the context of the economy, and it depends on the retaliation of the people of other countries. So we don't know, and we won't know for quite some time. But it will depend on whether those tariffs are placed on final goods or intermediate goods. It's really hard in a global economy to have a purely domestic manufacturing supply chain. And for those manufacturers that require and rely on foreign goods, that's going to increase their costs of production. So we're going to have a pretty unclear, muddy picture of what that looks like. But one place we can look is in the jobs data. If you see manufacturers hire, if you see a rebound in this very cyclical sector that should benefit from rate cuts and maybe will benefit from well-placed tariffs, who knows, then we should see a pickup in hiring, and that's what I'm looking for.
Always smart. Nita, it's good to see you. Nita Richardson there of ADP. Nita Richardson, also, of course, a Bloomberg TV contributor. Looking ahead to tons of Fed speak. You'll hear from Barkin today, tomorrow, Barman, Goolsby. Havoc and Daily as well, of course, looking to their reaction on a payrolls report. Mike McKee's back with us. Mike, we heard from Chairman Powell. Walk us through what we have heard from Fed officials so far this week and what to look for going into the quiet period.
Well, a lot of holding our options open talk, John. They're trying to, at this point, set up for data that they don't have yet, but the markets will have by the time the Fed is meeting. They go into their quiet period next week, so they can't comment on CPI or PPI. But what they're saying is basically the economy is stronger. We've seen inflation sort of stick higher than our target and hasn't been moving down in the same way. But overall, the economy's in good shape. So we don't have to move if we don't want to. They all then add that we want to bring rates down some. So they could go either way depending on how the data go. But I think one of the more interesting aspects, and this is something that Neela touched on here, is companies sitting on the sidelines for right now. And the Fed knows that because they're talking to all the CEOs. Companies don't want to make decisions on hiring, on investment, until they know what Donald Trump's plans are going to be. So this is going to be something of a quiet period. We get a rebound in jobs for November just because of the strikes and hurricanes. But do we see a lot of new hiring? That's going to be a really interesting question for these couple of months in between now and when Trump takes office.
Michael McKee, thank you, sir, on a Fed Speak and on the economic data. With us around the table, Leslie Falconio of UBS. Leslie, good to see you.
Thank you.
Let's get into your expectations. So this is what you're looking for: healthy consumption, loose fiscal, lower rates. Did the first two challenge the third?
Actually, we don't think so. I mean, we're looking for lower rates, but not something that is dramatic, because we're still looking for the soft landing. So we do think the consumer's strong. We think the labor market stays strong. But our outlook for interest rates in 2025 has probably fallen about that 4%. So when you think about where we are right now, it's not as though we're expecting this, large decline in interest rates. But, one of the things that we look at when we have these allocations and the risk to the market that I know all of you have been talking about is if, in fact, the Fed does continue to cut and people are concerned about this inflation, right? The market has a tendency, particularly fixed income, to speculate, right? It's forward-looking. So if the Fed cuts and we have interest rates move higher, I think that's the point of concern, particularly when you now have a market that has, the equity and the fixed income market returns are now negatively correlated. If that's due to inflation and the interest rates move up and they decouple, that's when you're going to have these price-sensitive buyers kind of get a little bit concerned about that long end and really require more term premium.
What did people get wrong heading into the election about Republican policies that sound like they're on track, being inflationary, and now people aren't really talking about it as though they will?
I think, it's funny, last time we were here, we were talking about what the market was pricing in, given the fact that the betting markets really had, made the decision prior to the actual election. And one of the things that I spoke about was that, the expectation was, if in fact you had the shred sweep, that you'd have this bear steeper at first, but you should push against it, right? And when we talked about, what we saw in November, we've seen interest rates come down. So I think a lot of that was priced in, particularly when you look at things like inflation expectations in the short end, decoupling from oil coming down. So all these kinds of things were priced in. You've given a little bit of that back, but I think it's too soon to say that things like short end inflation expectations are going to continue to decline. I think they will probably stay where they are now and even maybe have the potential of moving up in the near term.
Do we have we reached a point where the labor market is no longer the barometer to look at, that it really is back to the inflation reads at a time where that is the one lever that could potentially push the Fed in a much more aggressive way to hold off on rate cuts or potentially even move in the other direction?
We've had this changing narrative for quite some time, and I do think, listen, I think it's balanced. I don't think do not look at the labor market. You do. But, the labor market has continuously been strong. I mean, we have, when you saw the JOLTS data, you had the quits rate up for the first time since, 2023. We have, the claims a little bit higher today, but still trending lower. But I think people are just really worried on that inflation front, particularly given the fact that we are, and it's our expectation too, that the Fed cuts in December and it goes, 4 times in 2025, that we have this sort of reacceleration. And I think that's really what the focus is right now.
So we had David Leibovitz of JP Morgan on earlier, and he said that earlier this year they were very excited about high-yield bonds because they expected a compression in the lowest-rated debt spreads. Now they're kind of done with that. They kind of see that that trade's over. Are you in the same place?
Absolutely. I mean, when you look at high-yield bonds at 260, 265, that risk premium is incredibly compressed. And as you pointed out, this has been led by the CCC sector, which has come down. What's interesting about that sector, you've had such a high demand, within that sector for those yield-hungry investors, right? But even as volatility went up, it hasn't gone up lately, it's actually come down, but when it was rising, spreads were very, very narrow. So you really didn't see a lot of widening in that sector. So we do think high yield is a bit on the rich side. We really prefer the higher quality. You have that yield, there's no question, but the risk premium that you're being paid just isn't adequate right now. With that said, if the opportunity arises that high yields widen out, we would be opportunistic, because we don't think you're going to be a recession, or we don't think spreads are going to, move materially wider.
Do you think that this is basically the message right now heading into year end? You go with what's worked, you don't really do much else, you kind of sit on your hands, you wait for momentum to lift, and then you reassess next year when you actually get policies. Is that kind of where everybody is right now?
Those that are making money. Yes, I think so. But yeah, I do think that is really sort of the overall. I think that right now people have been in the camp where, the market has been very volatile. The market is, as the MOVE index has gone up and down, we've had a lot of, changing of narratives. But I think now to the end of the year, people just are tired of the speculation. You really, really need to wait to see the policy, what the policy is going to be. And, I think you've had the have and have-nots this year in terms of people being right and wrong on the side of whether it's equity or fixed income. But I do think it's going to be a little bit quieter at the end of the year. And the first quarter is going to be incredibly important, but it's really going to be the second half of 2025 when you get that data that's really going to lead.
Leslie, it's good to see you and great to catch up as always. Thank you. Leslie Falconio there of UBS. With an update on stories elsewhere this morning with your Bloomberg brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Sources told ABC News that a search warrant is being sought in connection with the suspect wanted in the fatal shooting of United Healthcare CEO Brian Thompson. Sources also telling ABC that police appear to be closing in on the identity of the alleged shooter. Thompson was shot around 6:45 a.m. yesterday outside the New York Hilton in Midtown. Police are offering $10,000 for information on the case. And Kroger shares this morning are off the low, still down about 0.5% in the pre-market. It trimmed its annual outlook, posted third quarter sales that missed expectations, all pointing to an uncertain economic environment. The grocer did, however, reiterate that it's confident that regulators will approve the acquisition of its rival Albertsons. TikTok tripled its U.S. shopping sales to over $100 million. The company said its app drew a 165% annual increase in shoppers for the 2 days between Black Friday and Cyber Monday. This comes as the app faces a potential shutdown in January as regulators fear its parent company, ByteDance, poses a national security threat. And that's your brief, John.
Danny, thank you very much. Up next on the program, we'll set you up for the day ahead and bring you an exclusive conversation. Francine Lacqua sitting down with Marine Le Pen. That conversation up next.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution we think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
The opening bell about 41 minutes away. Equity futures right now negative by 0.1%. The S&P on a 4-day winning streak coming into Thursday. A little bit lower on the Nasdaq as well, down by about 0.1%. Let's turn to France, where French President Emmanuel Macron is searching for a new prime minister after lawmakers passed a no-confidence motion. Bloomberg's Francine Lacroix sat down with National Rally leader Marine Le Pen and asked her if getting the deficit to 3% of GDP in 2029 is far-fetched.
Getting to 3% in 2029, I don't think it's credible, but I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes. Once again, these are simply promises, and they know very well they can't keep to them. Mr. Barnier made this promise, and in reality, his budget worsened the deficit by 12 billion. So if we don't make significant, intelligent structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with these two solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be? C'est l'affaire de quelques semaines.
Well, it's a matter of a few weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxes, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state. That's inadmissible.
Joining us now, the brilliant Francine Lacroix. Francine, once again, wonderful work as always. Walk us through your big takeaways and what you think the next steps are after speaking to Marine Le Pen.
Well, John, first of all, we have to see who President Macron, of course, appoints as prime minister, whether she will be behind him. Now, she was very clear in that interview, is that it doesn't matter for her, she says, who's prime minister. What matters to her is what points they want to push through in the budget. So we need to watch out for three things. First of all, the prime minister, he could be nominated as soon as tonight. It could take weeks. We know that President Macron in the past has taken his time. Two, what kind of thing will she support for the next budget? So she says that they will find a way forward next 2 weeks so that there's no government shutdown come January 1st. What happens after that? Are we going to be in political limbo and crises with prime ministers falling until the legislatives next summer? And then the third question is, of course, what happens to the presidential election? There's a big call. I think the latest poll is 54% of French now want President Macron to resign. What does that mean? Marine Le Pen is also facing trials that could make her ineligible to become president the next time around.
There's also this point, Francine, that she made, that Le Pen made, that essentially there is no case for Emmanuel Macron to quit under current conditions. Francine, it seems like that was a pretty considerable statement, considering that some people were wondering whether she was going to push him to resign. What comes up? What's the implication from that in terms of her willingness to work with him?
Well, first of all, she was very careful, Lisa, in saying that she would not push him to resign. She also, I tried to understand whether in his position she would have resigned. I think she's trying to strike a tone of being conciliatory, of trying to work within the institutions. But I also asked her what it would take. I mean, remember, she did very well in these legislative elections. 11 million people actually voted for her party. So I asked her what it would take for Emmanuel Macron to keep some of the promises that she thinks he should uphold because of these legislative elections. And she said, well, if that were the case, he should resign. So she's not pushing him to resign, but I'm not sure there's a way that they would work together, again, hand in hand.
Francine, a fantastic conversation. Looking forward to watching the whole thing. Bloomberg's Francine Lacroix sitting down with the national rally leader, Marine Le Pen. Of course, you can catch that full conversation online at Bloomberg.com and on the Bloomberg terminal a little bit later on today. The euro settling down, stronger today. French credit spreads or French sovereign spreads, a little bit tighter over the last 24 hours as well. Things have calmed down, Lisa, just a little bit on the market front. On the political front, we are deep into the unknown.
Yeah, we're deep into the unknown, and a bit of news that came out a bit earlier, I believe in the Financial Times, that European countries are discussing a 500 billion euro joint project for common defense budgets. So there are other things that are coming around as maybe there's a bit of a fire lit in certain sectors in the European area.
If you are just joining us, welcome to the programme. We are, of course, counting you down to the opening bell, about 36 minutes away. Equity futures at the moment just a little bit softer on the S&P 500, down a tenth or two across the board. No real drama here in the equity market. With some morning movers, let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. I'll give you a little bit of drama in the crypto world. Bitcoin through $100,000. The personification of the beneficiary. I chose Coinbase, a number of different reasons. I mean, this stock is up 70% since the election, Jonathan, but it's about what does Paul Atkins, the proposed new SEC chair, do for crypto? This universe is up by $1.3 trillion since the election and counting. Roll it over, have a look at synopsis. The personification of what happens in a software company when you're delivering into the AI world and to the semiconductors. It is a tale of two markets, according to the CEO. They design the electronic automation software. This is a tale of two markets, they say. The AI build-out, we know this, is rocking. It's the rest of the semi-world, which is, in inverted commas, doing fine. Doing fine is just not good enough. We know that in terms of the narrative for guidance, and they're guiding down to 11.5% to 12.5% growth in revenue, and that tails from 15%. I leave you with 5 below, Jonathan. Banging away, up 15%. This is about a new CEO, Winnie Park. Can she deliver the marketing know-how to drive this through? Apparently, the season's off to a pretty good start in terms of the numbers as we go into the holiday season. Jonathan, good morning.
Manus Cranny, good morning for the 5th time this morning. Thank you, sir. Appreciate it. Going into the opening bell, about 35 minutes away. Here's the trading diary. Here's the calendar. The next 24 hours or so. Richmond Fed President Tom Barkin speaking at 12:15 p.m. Eastern Time. After the closing bell, earnings from Victoria's Secret and Lululemon. Lulu, of course, a big focus for Bremo. So looking forward to breaking down those numbers tomorrow morning.
Maybe I'm going to move on.
You're going to move on from Lulu?
No, I don't know. We'll see. I don't know. Okay. I think that there are a couple other brands that are kind of in the running right now.
Team Fiore.
Yeah, look, it's true. All right. I do wear my workout clothes to work so that I can.
That's not where I was going with this at all. That's really not where I was going with this.
So that I can run home.
You always talk about the brand. All right, let's leave this. Tomorrow, humid sentiment and a big one, November payrolls. Looking ahead to next week, Wednesday CPI, Tuesday PPI, and an ECB rate decision. Coming up tomorrow, fantastic lineup. Tune in. Laurie Calvasina of RBC, Priya Misra of JP Morgan, Torsten Slok of Apollo, Mohammed Al-Erin of Queen's College, Cambridge, and a whole lot more. From New York, thank you for choosing Bloomberg TV.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here?
Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Have loved talking about the dollar stores, really giving you more of a picture on what's going on across rural America as well. 2% higher this morning. That is because comparable sales were higher. Really, we've been talking about Bitcoin. You are seeing the love in other Bitcoin-related stocks. Remember that soaring past 100,000 for the first time ever after Trump picked that pro-crypto advocate Paul Atkins as his choice for SEC chair. You see crypto-related stocks, especially MicroStrategy here, just soaring. MicroStrategy up almost 9% this morning, Matt.
That's right. Also, Vladimir Putin talking about the potential for a Bitcoin reserve. Putin on the same page with Donald Trump. In terms of the big movers industrials are really where it's at this morning.
That's true.
And I'm talking about the airlines, baby.
We're talking about the airlines, of course. Some interesting news when it comes to American Airlines basically boosting their adjusted EPS look. We saw something similar from Southwest and JetBlue. I actually want to go back to crypto, not to shock everyone.
Oh, really?
I know. For once,
I thought we were going to focus in on AAL.
It's interesting. All we needed was a catalyst. We finally broke above 100K, but remember Gary Gensler and the hopes and dreams that were pinned on Gary Gensler? He was seen as crypto-friendly. He taught that course at MIT. And then, you know, we saw what reality held for us. So it'll be interesting. There's all this optimism over Paul Atkins. We'll see if it holds.
We're going to talk about it later in the show. Crypto, of course, soaring on the heels of that new SEC chair news. But also, remember, Gary Gensler was cracking down on a lot of things, like ESG, for example. He was very worried about climate. Does that mean energy takes off, too? I don't know. I have no idea, Matt.
I mean, I think, you know, obviously if Paul Atkins disappoints the president, he will be fired. So it's different than Gary Gensler. There's one man running everything.
That's true.
Starting next year.
Starting next year. Let's talk about next year, and let's bring in Jay Hatfield. He is Infrastructure Capital Management founder, CEO, and portfolio manager. Jay, it's great to see you in person.
Thanks, Katie. Thanks for having me in.
I want to talk about next year because I want to talk about your year-end price target of 7,000. That's interesting because it feels like a lot of the sell side has coalesced around 6,500 for their year-end target. What gets us to 7,000 this time next year?
Thanks, Katie. Well, it's really just one and only one thing, and that is corporate taxes. So we think everybody has gotten distracted by the nominations and a lot of the hangover from the election, which was all around tariffs and deportations. But really, there's only two things that matter with this new president. The first is corporate taxes, and we won't know that for a while. So that's why we're sort of calling for a stalled market, or at least just a slow grind up, which is what we're seeing right now, and then a later rally. But if that corporate tax cut doesn't happen, we would have a consensus 6,600 target because kind of our insight during this cycle was around monetary policy. Monetary policy is relatively locked in. So we would just have a normal 10% increase in the market. We had a 6,000 target since June, but we're really focused on the corporate tax cut. If we went to 15, our targets would be 7,500. And this is really just arithmetic. This is not like looking up into the skies and talking to God. It's just that when you lower corporate taxes, yeah, you have more earnings, and earnings grow faster because you have better returns on invested capital.
How impatient are investors right now? Because that normal way 10% gain feels like not a lot when you look at almost a 30% gain this year in the S&P 500. Do you chase other asset classes? Do you chase other sectors to try to get above that 10%?
Well, the other factor that's material, because you know, if you really look at the Biden administration, not a lot happened, really. Nothing really changed. But there's one thing is probably the biggest change ever is in antitrust enforcement policy. And so we're super bulled up about the investment banks. Morgan Stanley, Goldman Sachs in particular is almost a pure investment bank. Jefferies on the small cap side. And so we're carrying numbers 30% above the street. The street's usually very slow in updating numbers, so that's where the buy side has an advantage. So we're assuming peak earnings from investment banking. And so we're likely to have really a boom in mergers next year.
And we should say at the top of the next hour, we're going to be speaking with Morgan Stanley's co-head of investment banking. We'll see if that bullishness will come to play.
Your very bullish target, though, Jay, if I'm not mistaken, is reliant on a much lower treasury yield. I mean, we're at 420 right now. We've been as high as 450. And if we get tariffs, if we get deportations, mass deportations, as the sign said at the RNC, doesn't that, you know, boost inflation? Doesn't that hinder the Fed from cutting? Doesn't that hold rates high?
Well, what people aren't focused on is there's $56 trillion of global pension assets, and our rates are the highest among the highest.
56 trillion, that's about the same as like the national debt, right?
Well, it's twice the, roughly twice the national debt.
They're in the same ballpark.
But they do rebalance. And so everybody's kind of ignoring that. We had this big sell-off in treasuries, and we said this at 450 on the treasury as well, so we've had 30 basis points of rally. But there's going to be a rebalance primarily at the end of the quarter. We're going to get much slower inflation year over year in the first quarter. We're rolling off 1.1% of inflation in the first quarter. So in other words, we had a 0.5, 0.4, 0.3. So likely to see decelerating inflation. The Fed will still cut. So we're more bullish about rates than most. And we actually think inflation is declining and not increasing. We're focused on the money supply and not what all the Keynesians...
Not the deficit and debt. I mean, I guess maybe you think Doge is going to have some teeth because you're thinking low inflation and you're thinking 10-year with a 3 handle, right?
3, but we did raise it, to be fair, because we adjust our views, so we don't go down with the ship. But we were really more at 3.25. We think faster growth, which is what we're likely to have, will put more demand and more mergers. You're going to get buyouts and debt offerings. So we have adjusted our target to 350 to 4. So really backed it up 50 basis points. But we do think that's going to be primarily driven by growth and not inflation. In fact, we think that right now we're almost in deflation because we have an adjusted way of looking more real time at what is the inflation rate.
Sure, you have your own inflation indicator.
Right, and we've adjusted it to look at rents, not just housing prices. So we're right now at 0.6 on PCE. And of that, most of that comes from auto services, which is a hangover from the pandemic.
Right.
And the money supply is dropping. So we think we could have negative inflation prints. I mean, if you adjust it, we may never get there because shelter could be 100 years before shelter goes down to 2%. God only knows what they're doing back there.
Jay, there's so much to dig into, not a lot of time. I have to go to this line in your notes because you're right. The Fed is fatally flawed and needs to be reformed. Those are fighting words, Jay. What does that mean?
Well, nobody really recognized it, but the Fed caused the Great Recession. They stuck to a 2%. It wasn't a 2% target. It was a 2% ceiling. And they raised rates 17 times in a row. They nearly created a recession in 2018 using that same completely arbitrary target. And then they fueled this huge inflation. So they've really done a horrendous job since the 2% target came in, and they don't want to change it. So we really need some outside force to come in and say, let's revisit this 2 to 3% target, be more flexible like we had with Greenspan, use this thing called judgment instead of rules, and avoid these huge policy errors that are often defended by the status quo. People like Bernanke come in and do studies about how wonderful their monetary policy was.
I always forget to plug it, but on infracapfunds.com. That's the website, right?
Right.
We can see your CPIR, your adjusted inflation indicator, and I think it's fascinating stuff. Jay, great having you on set. Thanks so much for joining us. Infracapfunds.com. Check out the inflation indicator there. I want to get to American Airlines, though, because the company raised its profit expectations by a lot for Q4, joining other U.S. carriers this week. We've had JetBlue and Southwest, I think, also doing that, expecting stronger travel and more profitable travel. Let's go over to Berlin right now. Bloomberg's global aviation editor, Benedict Campbell, is standing by. And Benny, what's driving this big boost to EPS outlook?
Hey, Matt. So people are traveling again. People are on the road. We saw the numbers during Thanksgiving. 80 million people on the move, a lot of them obviously by car. But really, an increasingly large number of people are flying again, are sort of rediscovering air travel, be it for shorter trips or for longer hops over here to Europe from the US. And that's really benefiting the airlines. American coming out today saying that the fourth quarter is looking better. The environment overall for revenue and also for costs is looking better. They're bringing down costs. People are the demand is there. And as you said, that follows the likes of Southwest, JetBlue, and is really supporting the stock. It's taking quite a pop this morning. It needs that encouraging nudge. Didn't do so well so far this year, but overall the picture looking pretty good for them right now.
What do we know about pricing power here? If there was so much worry about the supply in flights in the whole of the year, do we know now that there's more of an equilibrium, that the airlines have that power back?
They seem to still have the power because, as you say, the supply side is still fairly constrained, given everything we've reported about with Boeing, with Airbus. A lot of airlines still don't get the planes that they'd want. The seat numbers are still constrained, and people are traveling again. So they still have some pricing power. At the same time, there is the cost side that is really coming down, in particular on the fuel side. That is the single biggest cost for a lot of the airlines, and that they've been able to keep that under control, and that's really helping them.
I actually want to talk about United in some detail here, because you take a look at the
year-to-date.
I was playing with the charts this morning. I took a look at the entire group, and I saw United in blue there. It's up 140% year to date, which is fascinating because up until August, they were all trading as a block. What is going on with United Airlines, Benny?
Yeah, so it's not exactly Bitcoin territory in terms of the gain, but yes, 140% up this year. That would put them on track for their best annual return since 2010, to put that in perspective. Really, the stock took off sort of in October. That's when people really started buying into the shares. They had pretty good numbers in October. They've done a lot of things right operationally. The costs have come down. People are rediscovering things like in-flight Wi-Fi. They're bringing costs down, not just on the fuel side, but sort of operationally as well, in terms of taking out some unprofitable routes and so on. So people really like the story. If you look at the analyst ratings, most of them are at a buy right now. I think there's one lonely sell rating. So really United leading the pack. But it shows you that not everyone is in that same line. I mentioned American quite far behind in terms of the annual performance. But people really seem to like what United is up to right now.
Bloomberg's Benedict Campbell, we thank you so much for keeping an eye on all these airlines for us. You know, Matt, it really frustrates me because if you take a look at where airlines are classified, they're as industrials.
Yeah.
There's a reason this annoys me, because you look at the rest of the travel stocks and they're actually very much trading behind the broader S&P 500. That would imply that you have more room to run if you're buying into hotels instead of airlines, for example. If you fly, don't you need to buy a room too?
Yeah, no, absolutely. I mean, I think there's such a close connection to the oil price as well. Obviously, jet fuel and personnel are the two biggest expenses. Yeah. But it is interesting.
It's also capital intensive. You have these massive planes with, et cetera, maintenance issues and all that.
But things that are classified, like, so Ferrari is classified as an industrial. Clearly, that's a luxury business, right?
True.
So there's a lot of things in industrials. Okay, we have to go to break. Paul Atkins picked by President-elect Trump to lead the SEC. We're going to take a look at what that means for Bitcoin, for stocks, for the commission. Next, this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
In case you missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
He investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Now let's get to high interest. Look at what's making headlines around the world. The suspect in the NYC killing of United Healthcare CEO Brian Thompson remains at large. A search warrant is being sought in connection with the suspect, according to a report from ABC. The report, which cites unidentified sources, said the police now appear to be closing in on the identity of the shooter. Meanwhile, over in South Korea, President Yoon is set to face an impeachment vote on Saturday after the fallout from his martial law decree. But the country's ruling party, which opposed the martial law order, has said it will prevent the impeachment motion from passing. The South Korean won has yet to fully recover from the political uncertainty so far. And speaking of political uncertainty, yields for French government bonds actually fell after the leader of France's far-right party told Bloomberg that France can overcome its government collapse in a matter of weeks. But Marine Le Pen does not think the country's current crisis calls for the resignation of its president, Emmanuel Macron.
En tout cas, ce que j'ai dit, c'est que la démission du président de la République.
What I said was that the president's resignation is a personal decision for him and can only take place, in my view, when a political crisis happens or an institutional crisis can no longer have any other solution than the resignation of the president of the republic. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with 3 blocs, which in reality can't implement a policy.
We're going to now move to American politics, because now you have a crypto rally just soaring to new heights after President-elect Donald Trump announced his new pick to head the SEC. He selected Potomac Global Partners CEO and founder Paul Atkins to replace outgoing Commissioner Gary Gensler. For more on Atkins, we are joined by Nathan Dean. He's senior analyst of U.S. policy at Bloomberg Intelligence. And it's crypto. That's pretty clear that there's going to be big changes there. You have Paul Atkins, who has worked with a number of crypto stablecoin related companies, tokenization companies, but it's also a whole host of other things, isn't it, Nathan? Because you had Gary Gensler cracking down on everything from climate disclosures to texting at a hedge funds, record-breaking fines. How do you see the financial world changing?
Yeah, so, obviously crypto is very important. It punches above its weight when it comes to the SEC in particular. And what we think Commissioner Atkins, he was a commissioner of the SEC back in the early 2000s. There's really 3 things that I think he's going to be focused on. Let's start with crypto. Essentially, with the rally that we're seeing right now, and especially what we're seeing with Coinbase and Robinhood, there's this idea of the loosened enforcement risk. There's not going to be an enforcement albatross hanging over the crypto sector's neck with Commissioner Atkins as SEC chair. He's going to be looking at capital formation, maybe changes to the accredited investor definition, getting the ability for private individuals to look into startups and private markets to be able to invest more. And then third, which is most important, I think, to him, is this idea of deregulation. Everything that Chairman Gensler has done is on the table for being rolled back. But there's no magic wand here. Commissioner Atkins can't just come in day one and say, deregulate. There's a process that's a lengthy process. So I think you're going to see a lot of these rules that Chairman Gensler finalized are now in the courts will continue in the courts because that's the fastest way they can get overturned.
And that's good perspective. Again, it's not a magic wand here. There is still a process. I want to talk a little bit more about crypto because obviously you can see the enthusiasm in the price alone. We were talking about it at the top of the show, though, that Gensler was seen as very crypto positive. We know how that went. Tell us a little bit more about Paul Atkins' background and how committed he actually is to the crypto space.
Yeah, so Commissioner Atkins obviously has been working with the Digital Chamber of Commerce on crypto. He's very much seen as a pro-crypto, but also stepping back a little bit, he's more free markets and pro-markets. So what does that mean for crypto? Well, for the first step, I was talking about the enforcement albatross. That's most likely gone. The second step is there's a lot of firms out there like Coinbase and Robinhood and so forth that want regulatory clarity from the SEC. And I think this is where Commissioner, if confirmed, Chairman Atkins will come in and provide that clarity. So if you are a token, and it's deemed a security, here are the registration requirements, the compliance requirements, and so forth. But where we're cautioning the cryptocurrency industry on this, however, is that Congress also wants to play in this space. And so we think Congress is going to pass legislation next year that will essentially direct the SEC to promulgate new rules. Now, it'll be up to Chairman Atkins to actually go forth. So he may not be able to put his own personal views, but first year, half next year, it's this enforcement loosening up. Second half is most likely going to be putting out new rules to give clarity to these firms.
All right, Nathan, really appreciate that quick breakdown. Have to have you back soon. That is Nathan Dean of Bloomberg Intelligence. Now, coming up later in the show, the market outlook with Morgan Stanley Global Co-Head of Investment Banking, Eli Gross. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
All right, welcome back to Bloomberg Open Interest. A quick check on futures with moments to go until the bells ring. You can see the S&P 500. The color is red, but it's pretty much unchanged. We'll see if we can get a 57th record high today. The color just has to be green, so we're not talking about big moves here. You take a look at the NASDAQ 100. Also back to unchanged despite a big rally yesterday. The Russell 2000 still in the red, down by about 0.3%. Now coming up, less than 4 minutes until the opening bell, we'll discuss the market moves with Gustavo Medeiros. This is Bloomberg.
leader in technology for as long as you have been. Do you think AI is just as landscape changing as everyone else seems to think it is?
Sometimes things are overhyped. I don't think that AI is overhyped.
I think Etsy is uniquely positioned to benefit from AI. Finding that needle in the haystack is tricky. That's part of what makes Etsy both delightful and frustrating to people. And being able to serve the good stuff to the top fastest is where AI can really benefit us.
Our mission is keeping commerce human, and actually we talk about AI as helping us to be superhuman. It's really the partnership between AI and humans that makes Etsy work.
AI can help Etsy's customers personalize their searches and steer shoppers more directly to items they may want to buy. It's also helped the company improve reliability by predicting delivery times more precisely. But that doesn't solve a larger challenge, getting more consumers to think of Etsy more often and ultimately become repeat buyers. To this end, Etsy invented gift mode.
Getting in the top of mind consideration when you're thinking, I have a gift, I'm going to go to Etsy, just getting that to be more habitual. Gift mode provides a perfect opportunity for that. We get to know the gifter, but we also get to know the recipient. So it's a way to, sort of a more viral way to bring in more, introduce more people to Etsy.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, we're moments away from the start of trading after a 56th new record on the S&P 500 yesterday. Can we hit it again? Well, futures right now are unchanged on the S&P. The last few days, we've been talking about a soft open and then we rise to a record at the end of trade. Maybe that'll happen again today because the NASDAQ futures unchanged as well. Russell 2000 futures down. They've rallied from losses the last couple days as well. You hear the opening bell. Tractor Supply ringing the bell down at the NASDAQ market site. This stock, by the way, has more than doubled. I think it's up 220% over the last 5 years. They've done very well selling farm life equipment. And at the New York Stock Exchange, who's ringing the bell at the New York Stock Exchange? I see a lot of
Body Works.
Bath and Body Works. That's not a bad stock either. That's up 180% over the last 5 years. So a couple of winners ringing the bell. In terms of the major averages, Katie Greifeld, what do you see?
I mean, I want to talk more about tractors and hand lotions because you take a look at the screen right now, not too much to talk about. The S&P 500 pretty much unchanged. Like Matt said, that can change, and we've been watching it change, of course, as we get closer to the closing bells. But a quiet open on the NASDAQ 100 as well for your big tech names. This was the big outperformer yesterday, finishing about 1.2% higher, so a little bit muted at this open. And then you take a look at the Russell 2000. It was down to the tune of about 0.3% pre-market. Now pairing some of those losses. We'll keep an eye on the small caps. But let's get specific here, and let's talk about Kroger's, because sales missed estimates last quarter, also narrowing its forecast guidance for 2025. It is, of course, awaiting that court review on its proposed merger with Albertsons. We've been waiting for that one for a while. Shares down about 1%, Shonali.
Yeah, you've got to wonder if the new world of antitrust will help that one out. I'm looking at another sector. I'm looking at consumers. Dollar General, it narrowed its full-year guidance as years of price increases across the economy continue to squeeze the core base of low-income consumers. Yet you are seeing Dollar General get some relief. Despite the challenges, it showed signs of progress in the latest quarter. Comparable sales rising 1.3%, the stock rising 1.5%. This was the stock otherwise down more than 40% this year, Matt.
Yeah, they've had a tough time, as well as Dollar Tree this year, but results boosting them a little on the day. American Airlines boosting its results, or boosting its expectations, I should say, its outlook for the fourth quarter, joining a couple of other U.S. carriers in doing so. We had Southwest and JetBlue also saying it's going to be a strong travel season this Christmas and a more profitable travel season. As they do that, obviously the shares go up, in American Airlines case, 9%. 8%. I also want to take, speaking of going up, I want to take a look at crypto right now because Bitcoin pierced $100,000. Right now we're trading at 102,622. Trump's SEC pick helps. Paul Atkins, he's more crypto friendly. And I think it also helps that Vladimir Putin gets on the same page as Donald Trump and talks about putting together a fund of Bitcoin. It's more reliable than the dollar for the Russians. Let's bring in Mike Regan right now, Bloomberg's global crypto editor. Mike, I guess we knew it was going to happen, right? It was almost inevitable. But what are the drivers here?
Yeah, it really did seem inevitable, though. It hit that 99,700 level like almost 2 weeks ago, and then really turned around. So there was clearly some really strong resistance right at that 100,000 level. Whether it's just that typical round number resistance, there's also a lot of options outstanding right at that level. But it did. You're right. It did feel inevitable. The news on Paul Atkins, very crypto-friendly pick for the SEC, was confirmed late yesterday. Also, one of the Trump cabinet nominees that's probably going to have a much easier road through confirmation than some of his other picks, which is also something I think the industry is taking note of. But I would also point out, Matt, the timing is really interesting because it was really it was like 9:30 at our time last night, right at the morning of the Asian hours. And when you look at what's going on in Korea with the won weakening, the Kospi weakening, crypto trading has become so huge in South Korea that now that on a dollar value basis, it's actually bigger than the equities trading in Korea. Wow. So I wouldn't discount sort of the bullishness and sort of even crazy to sound, but a haven trade in Korea for Bitcoin, given the time of night where
not crazy to me, brother.
Yeah,
a lot of macro moves going on, but also, can I just say, I'm a bit impressed by the financial ingenuity here. You see among crypto traders. Can you explain this arbitrage trade that's going on with MicroStrategy's notes?
Yeah, it's sort of complicated, but to really boil it down to simplicity, MicroStrategy is doing two things. It's offering actual equity, secondary equity offerings, and these convertible notes. And it's become a very popular hedge fund and retail trade. Retail is very all in on the stock and just buying and going along the stock. But there's also this trade where some hedge funds are going in and out, shorting and going long the stock, but also going long the convertible arbitrage. And it's almost become this mini asset class of itself, MicroStrategy. When you look at these ETFs that track it, just that single stock and lever up on it. So MicroStrategy has become this sort of phenomenon in itself, completely detached from really the core underlying software business that's at the heart of it, and really become this really speculative play on the direction of Bitcoin.
All right, Mike Regan, great to see you. You're a busy guy, so I know you got to get back to the desk. Matt Miller, I know that everyone makes fun of you for buying early and then selling early. How do you feel today?
Yeah, I feel, it's horrible because 11 years ago, I bought a Bitcoin on this set from Max Raskin. I tweeted out a clip of that, and I spent it.
$800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games
and hogs.
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this set. And what a joy that is.
I'd be my feet in the sand and a beer in my hand. Let's talk right now about expectations for 2025. Market trends that we can look forward to with Ashmore Head of Research, Gustavo Medeiros. He joins us here on set. Can I call you Gus?
Yes, absolutely.
Call you Gus?
Thank you very much.
Gus, great to have you here. You are focused at Ashmore in London on the rest of the world, on EM, really, and we're watching this incredible sort of U.S. exceptionalism rally just extend. Does it get lonely in the rest of the world, or, do your clients want you to shift your focus? How does it feel?
It does feel a little bit lonely, to be honest, but, it's not a terrible feel. I think that the U.S. exceptionalism has been extended, and you're right. If you look at valuations today, we're just around 26 times earnings, right? And that implies, an earnings yield of around 4.5%, just slightly under 4.5%. So you can think about it in a way, if you are only pure dollar-based investor, why bother buying an asset that has a volatility of 10 to 15% per year if you can actually sit in cash with very low volatility and get exactly the same earnings yield? Actually, quite a lot of renowned investors have been doing that. And the fact of the matter is that there's quite a lot of positive things going on for America. And this is a great economy, and it's been surprising to the upside most analysts. But there's quite a lot of anticipation for how this economy will remain great for 2025, 2026, and beyond. And I think this anticipation is already basically pricing in. So these levels of valuations are already pricing in a phenomenal economy, a great market. And I think that there's a lot more room for disappointment from here.
Yeah.
So this is an asset class that has more left skew, if you will.
And there doesn't seem to be a lot of hedging, right? I mean, we don't see people taking out that much insurance on the potential correction here. And I wonder, if I look at it inversely, do you see people getting in, edging into emerging markets, maybe buying options on the potential of a turnaround there?
Yeah, I mean, I think that's the crux of the matter, right? I think most investors that are building a portfolio, they're not thinking about upside, downside, although that's been quite a lot of the trading in 2024. People are afraid of losing the upside and buying options and then driving markets up. But most people are trying to build a portfolio for the long term. And this is where it becomes a bit of a no-brainer, quite frankly, to actually add exposure to the rest of the world. And the cheapest asset class in terms of like historical basis are in emerging markets. We're just talking about crypto. Dogecoin last night before Bitcoin went through 100 was trading at $62 billion market cap. Now, at $62 billion, this is basically, larger than many companies in Brazil. It's 50% larger than Itaú, the best-run private bank in Brazil. It's about the same market cap of Nubank, the best-run financial kind of bank in Brazil, fintech in Latin America that is doing extremely well. The meme coin environment, it's close to $120 billion, which is larger than Petrobras and Vale together. It's about 50% larger than SK Hynix, which is a phenomenal chip-making company in South Korea. Obviously, it's a global business, right? So we're talking about the level of exuberance, and you can see that in these corners of the market where leverage does matter and plays a big role, that kind of get overextended. And obviously now everybody wants to have more and more of the U.S., with Doge being the, deregulation and actually leaning down the government, which is a great
government efficiency.
Thank you very much. Now it became a meme government program rather than a meme currency, and perhaps that's why it's getting to new highs.
Gus, it's great context because some of these comparisons really make your head spin. I want to talk about China though, because the phrase EMX China has, I hear it so much more in the past couple of years than I did the years previous to that. And you think about where China is right now, how much of a driver is it for the rest of the EM bloc?
It's not as strong of a driver as it was in the past. I think there is quite a lot of growth that is taking place in emerging markets over the last 2 years have been EMX China growth. There was a huge amount of countries that actually did structural reforms and macro stabilization plan coming post the COVID crisis that actually led to a much better growth environment, a much better macroeconomic environment. If you look at upgrades versus downgrades, there are many more countries being upgraded than downgraded over the last 12 months. And that actually is being translated into a very resilient performance on the fixed income market. The equity market, both overall emerging markets and China, we're actually doing quite well. Actually, China is outperforming many equity markets in the world year to date on the back of these PBOC policies that were announced in September. China has a lot of economic problems and a lot of macroeconomic problems, but they have what it takes to actually solve them themselves. What our thinking has been is that since they've announced the monetary policy bazooka in September, the fiscal bazooka, it's actually loaded and waiting to be deployed. But actually, they've been waiting to see what happens in terms of the new administration, whether or not there's going to be an aggressive trade war. Because if there is this sort of headwind, then the sort of fiscal policy may be slightly different.
Well, to that end, how do you roadmap? How do you game plan what the Trump tariff policy might ultimately be?
So I think that you have to think about scenarios, right? And the most aggressive scenarios are basically Trump is going to do everything that he promised on the campaign trail. Very aggressive immigration, kind of like, deportation, mass deportations, very large tariffs across the board, and specifically to China. And that would be a very negative environment, right? But I would say that the U.S. stock market is also very, very far from pricing in. Donald Trump, as we know, he does care about the stock market. He's been monitoring that and tweeting about that constantly on his first mandate. I think, again, particularly considering how much the stock market is anticipating, there is no way that with these aggressive policies you can actually see a new all-time highs throughout 2025. Why? Because if you do get towards these more aggressive tariffs and immigration policies, that is going to have an impact on inflation, that is going to jack interest rates up, and that is, that's going to knock down the valuation of, assets that are overly exuberant. different, such as high PE and high multiple stocks, and obviously these other parts of the asset class. Whereas if you look at China or EMX China, you actually have tremendous opportunity, a lot of bargains. China is actually allowing for the companies to buy back their stocks, lending money directly to the companies at 2.25 percentage points. That's a tremendous backstop, right? And again, there's quite a lot of fundamentally positive stories going on in EMX China that have been ignored because of these UX exceptions.
By the way, just really quickly, can you see a parallel can you roadmap Trump by looking at what Milei has done in Argentina?
Well, that would be a phenomenal, I think that would be a great parallel, because if you think about the first trade war, there was a focus on the bilateral trade, the bilateral deficits, right? And that is a narrow focus that is self-defeating, because the genesis of the external imbalances from the U.S. are the local imbalances, the fiscal deficits that are very large. That runs a large current account, the twin deficits that it has been running for over 2-3 decades now. Now, if there are thoughtful policies, and tariffs are a mechanism to get a grand bargain, as Scott Bessent has been saying, and if the U.S. fiscal deficit is going to be consolidated towards 3% by the end of the Trump administration. Now, that is a framework that can actually lower these imbalances. That would be actually positive both for the U.S. stock market and for the rest of the world. But I think that in that environment, the valuation of stocks in the rest of the world tend to outperform, because there would be a huge relief rally across assets that have been actually trading at distressed levels. And quite frankly, some of them have been trading at humiliation kind of levels in terms of sentiment.
Gus, great having you in the studio. Thanks so much for visiting us here at 731 Lex. Ashmore, Head of Research, Gustavo Medeiros. Coming up, Dollar General sees challenges ahead next year, but is improving on a comp sales and average spending per visit basis. Earnings details ahead. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
All right, let's take a look at some consumer-related earnings today. Dollar General cutting guidance for 2025, but is improving on comp sales and the average customer spend per visit. But then you take a look at Kroger. It's narrowing its guidance range as it sees near-term uncertainty for the economy. It's also awaiting a court decision for its potential merger with Albertsons. We've been waiting on that one for a while. Let's talk about it with Billy Lipschultz. He's here to break it all down. Billy, a lot of big movers.
A lot of big movers. Well, not that many big moves, though.
Hey, we're
Kroger.
trying to sell this.
A lot of excitement. A lot of big movers if you look at how they've been performing on a 12-month basis. Kroger up 35%, while Dollar General down 41%, but still seeing kind of that bifurcation between consumers' ability to spend. When Dollar General's CEO is on the call talking about difficulty for people to be able to buy products, you see the impacts from the hurricanes playing out for that company. And as you mentioned, with Kroger, all eyes are on what a new administration could mean for that Albertsons merger.
Going back to Dollar General for a minute there, state of the consumer, we were talking a lot on this program about how most of America still makes less than $100,000 a year. They're really feeling the pinch. If you look at the Walmarts of the world, you're seeing above that line, really buy in more and more to Walmart. But you see not just Dollar General getting a little bit of love today, you see Five Below rising the most that it has in at least 2 years. What exactly is going on that could improve the picture a little?
Well, the big thing, Shonali, is that Five Below typically caters to teens, so younger people who have, $20 in their pocket that can go buy an iced tea and a nice speaker or some kind of fun thing. Like when you look at the actual dollar spend and the people who are going to the different stores, your client base at a Five Below is very different than someone who is trying to get by at a Dollar Tree or a Dollar General, where maybe they're buying groceries, again, versus what I would say is more discretionary spending typically at a Five Below.
Go on.
No, I just want to...
We have the same thought.
Yes,
it's
airlines,
on
airlines. So, first of all, I thought it was really interesting to see American Airlines come out today and adding to the Southwest and JetBlue, optimism. And then Katie pulled up a chart this morning.
I'm freaking out.
That kind of blew me away. I mean, it's not Bitcoin level, to Benny's point.
Pretty close.
But United Airlines has been on an absolute tear, especially compared to its peers. You can see here that Delta hasn't gone up 150% year to date, and American Airlines is really going nowhere over the last 11 months. So what's going on?
I think there's a divide. Full disclosure, typically fly United, and I think that United has...
Oh, it's because of that?
Well, I'm the exact driver. Because they have a hub in Newark, New Jersey, that makes it easier for me to go to California. No, but I do think it gets back to, again, the divide of spending power. So if you're selling premium seats, and if you're selling kind of the upscale consumer, whether that's someone who's flying for business or someone who can simply afford first-class seats, that's kind of been dividing it. Again, not looking too in depth at what the differences in these businesses are, but you've seen that with Southwest, which caters more towards a U.S. Domestic traveler who's maybe on a budget, whereas United has these nice big planes that fly kind of around the world. And that's
they're okay. They're not that great. And by the way, I know you live in New Jersey, and these two ladies hail from the armpit of America. Why doesn't...
I said that once this year, and now I will never live it down.
New Jersey has everything.
Yeah, but not a great airport.
Well,
I mean, don't you think they could really make improvements there? Not that JFK and LaGuardia...
I was going to say, I love Newark. I have a great experience
You're
in
out
Newark.
of touch here, Matt, I gotta say. He sold Bitcoin. He doesn't like Newark Airport. Bailey Lipschultz, it's great to see you. That is Bloomberg's Bailey Lipschultz. He covers everything for Bloomberg News.
SPACs, meme stocks.
Anything you can name, anything shiny. Anyway, coming up next, TD Bank missing estimates thanks to a weak performance in the U.S. We'll take a look at the Toronto-based bank next. This is Bloomberg.
Fixed Income Fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States. Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
And it's time now for the Wall Street Beat. TD Bank stock is taking a tumble this morning after missing estimates and suspending its growth guidance. For more, we are joined by Bloomberg's Christine Dobby in Toronto. And this adds to pressures. There have been a lot of regulatory concerns, and you already have a stock now down in the U.S. more than 11%. What is the future of TD Bank in this country?
Good morning. Yes, very disappointing morning for TD today. As you mentioned, they did miss on their quarter this morning, but I think analysts were really hoping to see some sense of how they would operate under the new conditions that came along with the anti-money laundering settlement that they struck with the U.S. authorities in October. And instead of getting any guidance on how the bank expects it will do going forward, we were told today that their growth estimates have been suspended, and they're now undertaking a broad review of their business. And there's not a really clear sense of when we'll get a better sense of how this business will operate going forward.
You do still have the incoming CEO addressing analysts on a call this morning, and incoming is another sign of uncertainty, isn't it? There's a leadership change underway here. How is he going to walk in with a fresh set of challenges?
Yeah, and it's interesting because this is a long leadership change. It was announced a couple of months ago, and he won't officially take over until April, so he's still in a bit of limbo. But as you said, he is addressing analysts on the call today. He's got a tall order ahead of him. Morale at the bank is quite low, and I think boosting that will be one of his chief tasks. He said today that he's been looking at all aspects of the bank, and as they do this review, he said, everything's on the table, and they do plan to have an investor day at some point in the second half of 2025. But yes, he's got a big job ahead of him.
Absolutely. Christine, thanks so much for joining us. Bloomberg's Christine Dobby talking to us about TD Bank. Over the last 5 years, the stock is up 3%. Coming up in the next hour, Morgan Stanley's global co-head of investment banking. By the way, that stock has done a heck of a lot better. Joins the show. So Sonali is going to interview Eli Gross. We're looking forward to that. And then, Wall Street superstars keep on coming. Apollo partner and chief client officer Stephanie Drescher joins us as well. Don't turn the dial. This is Bloomberg.
Stefana. I'm the owner of the family office and the company called Company I Limited. I also have a live streaming channel for startups. It's SG Trader, so we let startups to pitch investment community on our channel. I give them 3-minute pitch. We publish their video on our channel, and everybody who is interested, please welcome to send me your video, and I will roll for almost a month your video for all financial community. The channel is live, it's streaming live 5 days a week, from morning till night.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A message from a murderer? CBS News has confirmed police found the words deny, defend, and depose on bullet casings found outside the Hilton Hotel in New York City, where United Healthcare CEO Brian Thompson was shot to death yesterday by a masked man who fled the scene on a bicycle. CBS News law enforcement contributor Rodney Harrison.
Unfortunately, homicides are not as easy as it may look on the surface, and there may be some other reasons why this individual did such a well-planned attack on Mr. Thompson and took his life.
A law enforcement source says surveillance images from a Starbucks show enough of the shooter's eyes and nose to run a facial recognition analysis. City officials in Memphis are scheduled to speak with reporters this hour on the heels of a federal investigation that found serious problems in the police department. The probe was launched after Tyree Nichols was beaten to death during a traffic stop last year. Loyola Law's Lori Levinson.
The Justice Department has done an examination of the Memphis police force and say that they should be under a consent decree. In other words, monitored by a federal judge. Memphis hasn't agreed to that yet. They say that they want to review the report. They might also want to see what the new president wants to do in this area.
A constitutional amendment takes effect in Missouri today, restoring the right to abortion in the state. CBS's Shauna Mizell.
Things are still going to be a little bit tricky as it relates to access to the procedure because that amendment that passed in November doesn't get rid of any restrictive abortion bans, nor does it override them. So technically, the abortion ban is still going to be on the books.
A second round of bitter weather is sweeping states from Maine to Virginia, others in for more snow and wind. CBS meteorologist Craig Allen.
There will be tremendous amounts of ice that stick to and freeze up on all buildings and all structures as that cold wind blows across the Great Lakes.
Looking for a car you can count on?
Subaru pushing Toyota and Lexus out of the top spot on Consumer Reports reliability rankings. The study's author, Jake Fisher, saying Subaru doesn't add new technology until it's ready for prime time.
Subaru, they incrementally make them better. They don't start new.
Asian brands dominated the study. Domestic brands didn't do so well, with EV startup Rivian coming in last. Jeff Gilbert, CBS News, Detroit.
Weight loss injectables are still selling like hotcakes. GoodRx says the number of prescriptions filled for Zepbound and Wegovy more than doubled this year. Bitcoin right now higher than 103,000. This is CBS.
Love.
An idea that's out of this world.
2 European satellites have been launched on a mission to create artificial solar eclipses. The European Space Agency expects each fake eclipse to last 6 hours, considerably longer than the few minutes of totality offered by a natural eclipse here on Earth. Scientists say the extra time will allow for prolonged study of the sun's corona or outer atmosphere. Jim Crisula, CBS News.
20 years after it filed for bankruptcy.
Sometimes you feel a little Mexican.
Chi-Chi's is making a comeback. The chain's reached an agreement with Hormel Foods, which owns Chi-Chi's trademarks, to begin opening locations next year, including 2 in Minnesota. The founder's son, Michael McDermott, promises an updated dining experience with the same great taste and Mexican flavor. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. Coming up, we're going to get the latest on the changes in the French political landscape. Phil Serafino, Bloomberg Senior Markets Editor, he's going to join us with the latest reporting. Carol Pepper, she's a founder and CEO at Pepper International. She's going to join us to get her outlook for the 2025 markets here. Michael McKee, Bloomberg's international economics and policy correspondent, on Fed Chair Jay Powell's speech tomorrow, and we'll get the U.S. jobless claims numbers. About 203,000, I think, is the consensus for the jobless number, so we're going to have full reporting there. Let's kick things off, as we do, with John Tucker and a Bloomberg Business Flash. John.
All right, and this report being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Major stock averages hovering around their records. You have 6 of the 11 major industry groups in the S&P 500. They are higher. Energy and consumer discretionary in the lead. Brown-Forman, the best-performing individual stock in the S&P 500, that was up over 8%. The company behind whiskey, wine, tequila, bourbon, the basic food groups, says earnings per share and organic sales for the second quarter beat consensus estimates. Nora's going to come along with a more in-depth, smarter report. Another top performer, American Airlines, raising the profit expectations for the final months of the year. And meantime, Max Kettner at HSBC, he remains bullish as the new year approaches.
We're still going to be overweight equities, particularly U.S.
but really across the equity spectrum, the most bearish you can get is maybe neutral on a sector and on a region. But honestly, when you look at the numbers, I think you could easily see some sort of 5 to 10% up in the first 6 months.
And eco data ahead of tomorrow's all-important jobs report. Jobless claims edging higher last week, though they do remain close to historic lows. Right now, the S&P 500, 3 points higher, 6,089. That's good enough for a record, actually. Dow Jones Industrial Average up 27 points, 45,044 of the index. The NASDAQ 100, that is lower right now, down 26 points, down about 0.1%. And oh yeah, Bitcoin remains above 100,000, 103,538. It's getting difficult.
Do you have your party hat? Your Bitcoin party hat? No?
Yeah, I don't know. It's just,
he didn't. I didn't feel that from him. I didn't feel that
you
from
look
him.
cold. You okay?
Huh? I look cold? He's making fun of me because I'm sitting here in the radio booth with a hand warmer is what's happening because it's so cold. Alex Steele here.
Where is that hand warmer?
Currently, it's actually in my pocket
okay.
Of my jacket. I undid the pocket. Anyway, so my right hand is super warm right now. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're clearly bringing you all the top news that you need to know within business, economics, and finance through my hand warmer. We do want to get to some individual companies because surprisingly, a lot of the airline companies have come out and they have some positive things to say. They're seeing that ever since the election, they've seen business kind of really start to pick up again, which is quite interesting. Nora Melinda joins us now, Bloomberg Equities reporter. Yeah, talk me through some of those numbers.
I mean, yeah, as you mentioned, we're seeing airline stocks, the sector is performing very well today. They are among some of the biggest gainers in the S&P 500. As we're looking at some of the individual names, I mean, I'm watching American Airlines. It boosted its profit outlook heading into the holidays. And as you said, everyone was really talking about this election and saying how it would have bred potentially uncertainty. So I do believe, talking to sources, that there was a low bar coming into this, and clearly they're outperforming here. And especially as they're still pegging it toward resilient consumer demand, it does seem as though people are still very choosy about certain airlines. I mean, when we're looking at it on a year-to-date scale, United is really just blowing the rest of them out of the water. It's up 150% year-to-date. As I'm watching the other names, you've got Delta that's right behind it, up about 65% this year, but the rest are up in about 20%. So we're really seeing United pulling forward at the forefront of it all. It's been on an absolute tear.
You know what's also up, just because we had Jody Laurie, who covers the leisure companies for Bloomberg Intelligence. She's a credit analyst. The cruise lines. I mean, Royal Caribbean's up 96% year-to-date. Norwegian, Carnival up 45%. I mean,
see, I was just on their website. I was just on their website trying to debate if I should go on a cruise. So maybe I need to do a little bit more.
What, would this be your first cruise?
So I've been on one. I went to Carnival, but it was the second smallest boat, and I felt a little bit claustrophobic. That was back in 2017. Okay. Haven't really circled back to the cruise line since.
But she's thinking about it. So
I'm thinking about it. I'm thinking about it. We'll see who sways me.
We're just kind of the point. All right, we're also looking at Five Below. So they have a new CEO, and their earnings and their outlook wasn't terrible.
It wasn't terrible, and especially as we're looking at like these consumer names, especially the budget retailers. When we think about Five Below, I mean, of course, the people that it attracts tends to be teenagers. Young people are going in there, kind of discretionary spending. But when you compare that to like a Dollar Tree, Dollar General, of course, we did get Dollar Tree reporting yesterday that beat, but then Dollar General cutting its outlook today. So it's lots to kind of keep an eye on here. But specifically for Five Below, the stock is down about 45% this year. So of course, this is good news that shares are climbing today for their best day in 2 years.
Yeah, but even so, Dollar General saying they're seeing signs of progress in this quarter. So there is that. Before I let you go, Brown-Forman.
Yes, I mean, John talked about this a little bit as we're thinking about like these liquor names. I was actually looking at a note from J.P. Morgan. It's titled, "Is the Hangover Over?" Shares of Brown-Forman are down more than 20% year to date. But today we're seeing it rising after it reported an EPS beat and organic sales for the second quarter that beat consensus estimates. So something to keep an eye on here.
All right. And I would wonder if that would be hit too with tariffs. Potentially, or for tariffs, and if there's some front loading or anything along those lines. All right, thanks a lot, Nora. Really appreciate it, Nora Melinda, joining us there. The top geopolitical news of the last 24 hours is what's happening over in France. We are still looking for President Emmanuel Macron to speak later on this afternoon. We're all waiting to see who he'll nominate as his next premier. They're facing a political crisis over in France. If you remember, the government lost a no-confidence vote in Parliament. In an exclusive interview with Bloomberg's Francine Lacroix, Marine Le Pen, leader of the National Rally, the far right, discussed whether President Emmanuel Macron should resign. She said it was a personal decision.
En tout cas, ce que j'ai dit, c'est que la démission du président de la République.
What I said was that the president's resignation is a personal decision for him and can only take place, in my view, when a political crisis happens or an institutional crisis can no longer have any other solution than the resignation of the president of the republic. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with 3 blocs, which in reality can't implement a policy.
All right, that was Marine Le Pen, leader of the National Rally Party of France, along with Bloomberg's Francine Lacroix. Let's get the latest reporting from the French political situation. Phil Serafino joins us, senior markets editor for Bloomberg News. He is in France. Phil, can you give us the latest reporting? What are the next steps here for French politics?
Well, as you mentioned, Macron is speaking on French TV tonight, Paris time. And the expectation is that, by rights, he should be naming a new prime minister because it's not good to have a caretaker government. The other existing prime minister, Michel Barnier, handed in his resignation today after the no confidence vote. It's not clear, though, that in fact he will have a name ready to go tonight. It took him a couple of months over the summer to come up with the name of Michel Barnier because he's trying to deal with a very divided parliament, as you mentioned. So he's speaking tonight. Whether he will have the name of a prime minister, we do not know yet, but that's the thing people are waiting for. Can he find someone who can bridge the political divide in parliament?
So when Marine Le Pen comes out and says, I don't think you should resign, it's up to him, and then Macron says he has no intention of stepping down, are people asking him to do that? Like, is that now in the zeitgeist?
Yeah, there has been much talk of that. It's been kicking around for a few months since his party lost badly in the European elections, and then in the following French parliamentary elections. That has been kicking around, and he's said he's not going to do that. His term runs through 2027. You get 2 5-year terms in France. He wants to serve out his second term. So, and it seems like a little bit of an olive branch on her part to say she's not pushing for that now. There still remains, there's a very difficult situation politically to get a budget passed and get it through Parliament. So we'll see.
Boy, I'm not sure I'd want to be prime minister there because, as I understand
no kidding.
As I understand it, it's almost like a no-win situation here with the right and the left seemingly having some level of, being united here. Is there any room to govern here?
Well, it seems like it's a very difficult needle to thread because the far right and the far left, both have demands that Macron does not want to meet. He particularly does not want to deal with the far left party, which sort of dominates this 3-party coalition of left-wing parties. So he's trying to come up with a sort of centrist approach to the budget, but they just tried that. They came up with what they thought was a compromise, and it got rejected. So hard to see. I mean, the math doesn't change in Parliament just because the Prime Minister has stepped down. He still needs to come up with a budget that he can get a majority vote for, and unclear how that's going to happen.
Okay, so on that, here in the U.S., if you can't approve a budget or an extension, the government shuts down. What happens in France?
I think they can do sort of an emergency budget. The problem is there are EU rules on the budget deficit, and France has far exceeded those, and France has made pledges to the European Union that they will get that deficit under control. With an emergency budget, I don't know that that does what they need to do as far as cutting spending and possibly raising taxes. Then that's the sticking point. The budget needs to cut spending and raise taxes. They were going to raise taxes on companies and the wealthy. Marine Le Pen today was saying, we're not going to go as far as you want it to go. We'll let the budget deficit run a little wider than we otherwise would. So I think in short term, they can sort of paper things over. It's the medium term and the long term where they have a real problem.
All right, Phil, thank you so much for joining us. Really appreciate it. Phil Serafino, senior markets editor for Bloomberg News. He is located in our Paris bureau here. Again, we'll hear from French President Macron at 2 p.m. Wall Street time, 8 p.m. Paris local time, and we'll see what he has to say about this government. Well, will he have a new prime minister to offer?
I think it was Caroline Conan yesterday who was talking to us about the fact that Marine Le Pen doesn't actually want to be seen as an agent of chaos. Like that's not part of her goal. So that is also quite interesting in terms of how they will negotiate who will become the next premier at the end of the day. I've also read some articles that, look, Macron should give an olive branch to, say, the right, etc., more the centrist right. So it's gonna be really quite complicated. You also have to wonder, like, why now?
Yep.
Like, why is all of this happening now, whether here in the U.S., then France, and South Korea, Germany next year as well are going to have elections. The leading party there has been struggling.
Yeah, so people are searching for common threads, and you could certainly weave a common thread through some of these moves across the globe, quite frankly. Coming up, we're going to check in with Carol Pepper. She's the founder and CEO of Pepper International. She's going to join and discuss her outlook for the markets. And Michael McKee, he's going to Bloomberg Economics. What are we going to get from the Fed tomorrow? All that's coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. With this Bloomberg Business Flash, the major stock average is kind of groping for direction right now. Investors seem to be on hold ahead of tomorrow's monthly jobs report. S&P 500 did register its 56th record close in yesterday's trading. Bitcoin right now topping 100,000 just hours after President-elect Trump said he intends to nominate the cryptocurrency advocate Paul Atkins to be the next chair of the SEC. Crypto-related stocks are also getting a boost on that word. Some of the individual shares on the move. American Airlines raising its profit expectations for the final months of the year. American Airlines right now up over 10% as a result, joining other U.S. carriers predicting stronger performance heading into the holiday travel season. Walt Disney raising its annual dividend by 33% to $1 a share. That's actually a popular Christmas present, giving shares of Disney.
Yeah,
because it comes in a cool-looking package with Mickey in it.
Yeah, don't get me that. I like
I'm
perfume.
Get you some more hand warmers.
Or hand warmer. I would take the hand warmers.
S&P 500 down 3 points. The Dow Jones Industrial Average 24 points lower. Right now, the NASDAQ 100 is down 27 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right. Thanks so much. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We are currently broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube as well. So for the markets, we hit the 56th record high of the year. Markets going nowhere fast today. So what happens then? If we get the Santa Claus rally, what happens after in 2025? Carol Pepper, founder and CEO at Pepper International, joins us now. Carol, there was a great survey that came out today that talked about how CEO confidence is smashing it. After the election, CEOs feel so much more confident about the economy, etc. Does this last? And is that optimism reflected in equities, and should be?
Yeah, I think they're confident for good reasons. I think, first of all, the fact that we had a peaceful election and there's not going to be any other problems in January is making everybody very happy. The new team is organizing, getting itself together. There are checks and balances with the minority Democrats and some of the other Republicans. So the political situation here has become very calm. That makes people very happy. There's also a commitment to keeping regulation low, not adding additional burdens on companies. So CEOs are justified being happy. And on top of that, the economy is humming along. Inflation is under control. If you were a CEO, what more could you ask for other than a big bonus at Christmas, which a lot of them are because they had a great year this year.
So what are some of the areas when you talk to your clients, your private clients here, what are some of the themes that you're bringing to bear on 2025?
Yeah, well, as you know, I run money for family offices with over $100 million. And basically, we look for long-term trends that will continue to do well over the whole year and even 2026 and 27 going forward. So the big themes are things like global data centers, continued rise of AI, recovery of real estate. You know, there's a lot of positive themes here for people to look at. So we're looking at things that will continue to grow in, frankly, a risk-on environment. Of course, there will be consolidations. Of course, there will be down days and corrections. There has to be. But it doesn't mean that the overall trajectory for the year will not be up. And that's the direction that we're going. We're going to higher U.S. markets for a whole bunch of reasons. And for that reason, the clients are happy. And they're not looking to pull back on their equity positions. If anything, down days are good times to add to positions that you know will do well over the long term.
So the counter to that is that the U.S. makes up so much now of the global markets that everyone is just so heavily allocated to that. Also, can we get all the things? Can we get lower inflation, a good jobs market, continued Fed cuts, some kind of fiscal stimulus from Washington, and higher equities? Like, is that all reality for us? How do you push back against that?
Well, I don't see any headwinds. Nobody is telegraphing very loudly. For example, Powell is not saying I'm stopping cutting. There are no big inflation numbers that are zapping people and warning. The data is supporting that thesis right now. So obviously, if the data changes drastically, if suddenly there's a run on U.S. workers and suddenly wages are shooting up, we will hear about it. It will show up in the numbers. So right now, there's not a lot of evidence to counter the continued dominance of the U.S. equity markets. For that reason, as you know, I work with also a lot of non-U.S. families, and for them, this is the safe haven. Come and put your money into U.S. equities if you wanted to grow. It used to also be U.S. real estate, but I think right now equities are equally attractive and obviously much more liquid than U.S. real estate.
So let's go to some names here. Amazon, what are your thoughts there?
I love Amazon because, again, this is a company that has many, many arms and many ways to make money, lots of revenue sources. They'll do well over the holidays. There's always a bit of grumbling, you know, will consumers shop online? And then every year we see the amount of consumers shopping online increasing relative to in-person shopping. And Amazon's, you know, next day delivery is fairly flawless. They're also making, you know, have the Amazon Web Services and have huge cloud computing capabilities. They're pushing into AI. So I think Amazon is continuing to be a dominant player. And again, the big are going to get bigger. The winners are going to win more. That's the kind of market that we're in right now. This is not a market, in my opinion, to bet on the underdogs. Take the stupid bet, take the momentum bet, and bet on the big winners because they're going to continue to win. And certainly, you know, Amazon, NVIDIA, names like this are going to continue to be the winners, certainly for 2025.
Okay, so is that a buy on dip? Because Amazon closed at a record high yesterday. So any dip, you want to buy them?
Yeah, absolutely. I mean, if you don't have them, I've been telling people to buy them for a few years now, so hopefully they did. But it's a great Christmas present. Rather than buying Disney stock, although it's very nice, Disney is a bit of a one-trick pony. Go ahead and buy Amazon for your kids' trusts. Or when you're doing your final gifting for the end of this year, go ahead and put some Amazon stock in the trust for all the kids and the charities, and you'll be very glad you did so.
My daughter will be so excited. Christmas morning, here's Amazon stock, honey.
Here's a certificate.
But fair enough.
Exactly.
So,
She'll be
Carol,
really excited when she's going to college. Trust me.
yeah, exactly. Carol, talk to us real quickly. I know you've been consistently bullish on NVIDIA. What's your thoughts here?
Yeah, I think that, again, they're the dominant player. I don't think anybody's going to catch them in the near term. And so, again, think of if you had been smart enough to buy Amazon when it came out, how wealthy you would be today. So, again, buy NVIDIA, hold your nose at the price, and put it away because it's going to be worth 10, 15, 20, 100 times more 5 years from now. So hold on to that stock. NVIDIA continues to be the best play out there. Of course, others will come along, but it doesn't mean they won't continue to be the market leader, and they have plenty of cash to keep innovating.
All right, Carol, thank you so much. We appreciate getting your thoughts. Carol Pepper, she's a founder and CEO of Pepper International, joining us from New York City via the Zoom thing. EcoGo, lots more economic data coming out tomorrow, which is a wonderful day. It might be the best day of the year when you think about it, December 6th.
You know, I heard a bird.
Yeah.
And the bird told me that someone might be having a birthday tomorrow.
Could be. It could be. Another trip around the sun. But it's big for, like, the Michael McKees of the world, the economics folks. Change in non-farm payrolls, 203,000. I guess when we're looking at the revisions, too, let's check in with Mike. Michael McKee covers all the economic stuff for Bloomberg. He joins us here in our studio. It seems, Mike, that the Fed feels like it's maybe got its handle on inflation and is focusing a little bit more on the unemployment business, the labor market. What do you expect to see tomorrow?
Actually, I'd say it's kind of the other. In talking to a lot of Fed people over the last week, basically what you're hearing is they feel the labor market's pretty much in balance. Okay. It is inflation being stuck a little higher than the 2% target and not really moving down over the past couple of months. So they're going to be watching the CPI and PPI next week. And they've been sending out a message that if any of these data come in surprising, the jobs or the inflation data, they could pause in December. And I think they've been trying to send that message because the blackout period starts tomorrow night. As soon as somebody's birthday,
celebration kicks off, that's what triggers the blackout.
Yeah,
I get it. Okay.
Exactly. And so, they won't have any way to tell people what they want to do except for calling up certain newspaper columnists.
So either way, though, it feels like Fed officials have been setting the table for a pause at some point. So do we understand a pause to be a long pause, a one-meeting pause? How do we understand that?
I don't think we understand it yet, but it's probably going to be a one-meeting pause in the beginning. But basically, they're meeting just a little more often than once a quarter. So at this point, you'll see a pause, and it might seem to last for a long time, but it'll just depend on what happens. There's two questions. One is, what is neutral and how far away from it are they? And they don't really know. They sort of experiment their way into it. And the other is, what is the incoming administration going to do, and how is that going to affect the economy? And they don't know that either. So they may take a pause for either one or both of those reasons to try to figure out what to do next.
Inauguration Day is January 20th, 2025. Is Fed Chairman Jay Powell going to receive a phone call from the White House, do you think, on that day?
I don't think so. First of all, Powell, obviously, at his last press conference, drew a kind of bright line in the sand. And even if new President Trump wants to get rid of him, it's not at all clear legally he could do so. So it would be probably to start a big fight. Right. You know, what's the point? Because Powell only has about 18 months left, and then
also he's cutting, right? And the whole point is Donald Trump wants him to cut.
I was just about to say that. That's the other thing is, like, the question is he going to keep cutting? Now, if he pauses too much, maybe that's going to make Trump unhappy. But you know, they're going in the right direction for the former real estate developer.
So for the jobs number tomorrow, what's my weather distortion thing I have to watch out for? Are we going to get payback from the previous month when there were storm disruptions? Like, how do I need to read the tea leaves from this number tomorrow?
It's going to be a little difficult. We got some state data for October that suggested in the 5 states hit by the hurricane that there were some significant job losses. Those don't compare exactly to the national number, so we can't just add them up and say that's the number. We're hoping that maybe we get some clarity from the Bureau of Labor Statistics. But basically anything that you saw over what had been the average of around 175 to 180 or so in the prior months, that's going to be your baseline number, and anything above that is probably payback. But the Fed's going to look past that for all those reasons, and they're going to look at the unemployment rate, which isn't really affected by any of those things. So as long as it doesn't change significantly, then it shouldn't change forecasts for what the Fed's going to do.
Can I just, you were talking about weather, bring what I think is a weather-related story. This is from the Federal Aviation Administration. Newark Airport is going to close between 12:15 to 6 p.m. today.
I couldn't believe Paul didn't bring this up. I saw the headline, and I'm like,
yeah, there was well, I know Rob Carrollin, our meteorologist.
They're decorating for the birthday party.
Oh, yes, there it is. There it is.
A wind advisory in effect, this morning up to 10 p.m.
I just saw an update on that. 40-mile-an-hour winds, which is not what you want to fly through, and the advisory said from Patterson to Park Slope.
So, I live in Park Slope. And I should point out that this is real because Mike secretly, maybe not so secretly, really wants to be a meteorologist. Like every time there's a raindrop, he like sends me maps and weather things. And he listens to like local news. Like he's all over it. He's got a buddy he calls and he talks to him about it. Just, I'm outing you, Mike, on your meteorologist dreams.
Yeah.
All right, coming up, we have much more on Bloomberg Intelligence. Markets, though, a flat on the day. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Risk kind of off the table today. Traders awaiting the all-important jobs report tomorrow from the government. That's going to indicate maybe the path ahead for the Federal Reserve, cut or keep cutting. After posting another record close yesterday, S&P 500, right now a little change, down about 5 points. That's 0.1%. 6,080 on the index. You have consumer discretionary. That's the best performing major industry group. The booze company, Brown-Forman, the best individual performer in the S&P 500. Right now, it's up over 8%. That's followed by Tesla. Tesla shares up over 4%. So what is the path ahead for the Federal Reserve and interest rates? Amanda Lineman at BlackRock weighs in on that.
For the December meeting, we're expecting a 25 basis point rate cut, even after Chair Powell's commentary yesterday. But in 2025, the path for forward monetary policy is much more uncertain. We would basically characterize our expectation as normalization of monetary policy, not easing.
Right now, the S&P 500, 8 points lower. The Dow Jones Industrial Average down 133 points. The NASDAQ 100, 28 points lower. Let me give you a Bitcoin quote. It's up close to 4%. 101,739. Or rounded off per token. Brent crude right now is up 0.1%. NYMEX crude up just about 0.1%, still under 70, 68.59 a barrel. And just to recap, the Federal Aviation Administration tells us Newark Airport in New Jersey to close between 12:15 p.m. to 6 p.m. And it doesn't say why, but I'm assuming this is because there's a wind advisory in effect until this evening.
Never heard that before.
Yeah, I mean, 40, 50 mile an hour winds. I heard at least one report from Rob Carolyn. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, John Tucker. Really appreciate that. John Tucker, Alex Steele, Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. We also every day talk about the Bloomberg Big Take story. It is a wonderful deep dive on the pressing stories within the economy and the markets at this time. And today, no surprise, it has to do with what we're seeing over in France. So President Emmanuel Macron in France had a grand project that he was going to implement, and now his grip on power is loosening. When he burst on the political stage and became president in 2017, it was a very different landscape. So he wanted to dig a little deeper into sort of what's changed, I mean, aside from COVID, in the last 7 years. Joining us is William Horobin, Bloomberg economics and government reporter on this Bloomberg Big Take story. I think it's worth taking a moment and rewinding to 2017. And Macron really, I think we forget how he burst onto the world stage.
Yeah, absolutely. In 2017, he came with sort of quite a unique promise from the French political landscape, both to sort of do away with the slightly moribund kind of traditional left and right parties, and also to really pursue an agenda of economic reforms that those parties had always failed to do. And the thinking was, that if he could be this sort of young upstart leader that could turn France into a pro-business country, bring lots of inward investment, that would solve a lot of the problems in terms of jobs, in terms of wages, that were driving people increasingly to the far right. And that sort of, in economic terms, he definitely got some success stories and brought down unemployment a lot. But things have gradually gone off the rails, really, and at the same time, the national rally, led by Marine Le Pen, has become a more and more powerful force and really built up its constituency. And that meant that when Macron called snap elections last year, we got a situation where Le Pen has a big enough number of seats in Parliament to effectively bring down the government, which is what happened yesterday.
So what is the future of President Macron as of today, do you think?
Well, the future for him personally is, if you believe what he says, is that he intends to stay to the end of his term his second term in 2027, despite the fact that some opposition parties are calling for him to resign in this situation. But immediately, what he has to do is appoint a new prime minister. Now, that's no easy task, given that he spent 2 months trying to find the last one, trying to find Michel Barnier. And the task of Michel Barnier was to essentially get some kind of coalition, or not so much a coalition, but at least the backing of parties not to bring him down in no confidence votes. And that depended on people having to cross party lines. But the math hasn't changed in Parliament, so there's no sort of magic figure who can unite these parties behind a government.
So to that point, what parts of Macron's agenda made everyone so unhappy that we sort of wound up in this situation? Or is it more sort of macro, broader factors that led to this point?
I think it's probably a combination of the two. I mean, I think as we mentioned in the big take today, you can sort of trace the problems back as far as the Yellow Vest protests. I don't know if you remember the Yellow Vest protests that began in 2018. And that was triggered essentially by a very sort of smart policy to. It was a climate policy that was supposed to increase taxes on gasoline, and that would spur more investment. The state would have more money to invest in green technologies. But the problem was that it missed the immediate impact on working people, which was people who relied on their cars to go to work, suddenly faced higher bills. And so, and we saw a similar thing with the pension reform. Suddenly, people were being asked to work for longer on the promise that this would be good for economic output in the longer run and lots of sort of intangible things for voters. So, in some ways, Macron's theories or economic theory crashed into sort of a reality of how people were hit by these policies.
Right.
Also, yeah, sorry.
No, it's just, William, are there voices in Europe that are questioning whether the changes in Paris suggest maybe the European Union in general may be at risk?
The European Union, I mean, but not necessarily as it is now, is it at risk? But there's a lot of voices that say the European Union really needs to make a huge leap forward in terms of pooling its resources, investing, and going toe-to-toe with the US and China on trade and strengthening itself generally. Now, Macron was always sort of the cheerleader for that direction for Europe. He scored a big victory in having in the recovery fund this hundreds of billions of euros of investment after COVID, but without with all the political difficulties at home, it's going to be hard for him to carry those arguments. Mm-hmm. Also, France's public finances are in a pretty catastrophic state, and this whole political blowout is not making it any easier, which is another problem because France, they risk not respecting the fiscal rules of the European Union, which will strip away some of the credibility from Macron.
Which then, incidentally, weirdly makes the ECB's job difficult too, because let's just game this out for a second. If yields actually wind up rising because of, say, more borrowing that needs to happen, or on the deficit, on the budget deficit or the budget, then what happens to the ECB? Like, they're trying to cut yields, right? Like, they're trying to cut rates. Do they have to rethink how they're managing their own strategy? So that's kind of interesting too when they feed through to monetary policy. All right, we really appreciate it. Thank you very much, William Horobin, joining us. Again, go ahead and check it out, the Bloomberg Big Take. You can check it out in the Bloomberg Terminal, also Bloomberg.com/Big Take. Definitely wind up checking that out. Taking a look at the bond market, you are seeing some buying coming in to French OATs, as we like to call them. The front end yields are moving higher, but we're seeing some buying in the back end. Of course, that instability very much front and center. In terms of the euro, though, you have to wonder, Paul, is that already priced in?
It feels like it.
To the market, since we kind of knew this was coming down.
Yeah, sitting here pretty steady at 1.0563. We had broken below 105 earlier yesterday, but now kind of holding steady here, 105.
Did Tom buy a plane ticket yet?
I don't know. It's certainly worth it. I mean, given where the strength.
There we go.
All that Bitcoin.
All that Bitcoin. Okay, Mike McGowan's coming up next. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. So in case you didn't know, Bitcoin's now up over $100,000. This comes a day after President Trump picked a pro-crypto pick for the SEC. That was a hard thing to say. Pro-crypto pick.
Yep.
Try doing that fast.
More so than Gary Gensler, I guess.
Yeah, much more so. This is Paul Atkins. Apparently, he is a crypto proponent, but also very much in favor of less regulation, etc. Broadly. Yes,
Can
John
I bring
Tucker?
you an upgrade on the Newark closing?
Oh, okay.
Okay, just real quick. The FAA says Newark Airport closed to general aviation aircraft, so not commercial, not the big jets, the smaller planes.
Yeah, that's important.
The rinky-dink planes that I fly.
That's why we have Teterboro going to there for their the smaller private craft.
Right.
Okay.
Okay, well, I'm glad we sorted
Some
that
people
out.
flying to Morristown.
Okay.
So we bring you weather updates and airline updates, as well as talking to our Bloomberg Intelligence guys. And for that, we have to go to Michael McGlone. He is Bloomberg Intelligence Senior Commodity Strategist. I think he's in Florida, so he doesn't have any wind weather issues right now. All right, Mike, I know a lot of hay is being made about $100,000. Do we need to retrace here, though, at some point?
That seems a bit elusive at the moment, Alex. It's follow the money. It's been, since this year started, about $32 billion of ETF inflows. Since President Trump was elected, about $8 billion of ETF inflows. And to put that in context, there's been, on the year, about almost $6 billion of outflows in gold ETFs. Now, they've picked up recently, but yeah, so to me, that's from a commodity standpoint, this is what's happening. I think is 100,000 is pretty good resistance. It's a milestone. I think it really brings into the forefront, but it's also showing the major paradigm shift of holding gold without Bitcoin in that space is just remiss. You have to have some Bitcoin in there or you're risk of missing out. So the key thing I've been watching today is the ounces of gold per one Bitcoin made a new high up to 39. Right now it's about 38. And questions what stops that trajectory from going higher?
Mike, give us a sense of how you think it might be reasonable to try to value a commodity or a currency like Bitcoin. Do I look at it relative to, I don't know, pork bellies or gold?
He's
or
laughing at you right now.
Yeah, what do I do there?
Because Paul, I enjoy the question. I'm a bit snickering because it's like right now it's animal spirits. It's the way I always look at commodities supply and demand. Now that's one thing about Bitcoin. It has definable diminishing supply. Basically, the amount you can only mine a day is 450 Bitcoins, and that's going to cut and be cut in half in 2028. And it's just the way it's set up. And there's increasing demand and adoption. So price must go over time, and it's just going to have these nuances. But right now, it's about the major shift in this country from being really pushing against cryptos, as we saw with Gary Gensler, now shifting over to a whole government that's so much positive cryptos. And you see things like the potential for us to be, the U.S. actually sell gold and buy Bitcoin, which I think is a bit wild, but that was a Bloomberg story that really hit the tape this weekend. So. And then quotes from Chairman Powell pointing out it's digital gold, and even from President Putin, there's nothing that can really stop it. It's the animal spirits right now, but it's the key thing I'm worried about is now that we have it into the mainstream and all the ETFs people are buying and adding to their portfolio, we still haven't seen the big test of how Bitcoin responds after President Trump has been elected, when the stock market goes down. And, at some point it will, and it hasn't been through that. So right now, I think what you're seeing is a lot of people are adding it to they're getting off zero, but it's still a highly speculative digital asset, basically trades about 3 times the volatility of the S&P 500 and gold.
Oh, wow. I did not know that stat. When we had the optimism from Paul Atkins now being the nominee for SEC, what regulation, what do you think the crypto guys were so pumped about? That it was him versus a Gary Gensler? Like, what kind of regulation either needs to be rolled back or needs to happen in general?
I think, Alex, it's the the stop of the pushback. There was significant pushback. Look how, I mean, the crypto people had to go to court to get ETFs launched. And these things have been in the works for a decade. It was just kind of silly. I mean, those of us who trade commodity ETFs forever show they're much more risky than a Bitcoin ETF. So it was just silly, some of the extreme regulation that pushed against it. And the bottom line that always really kind of flummoxed me was this space adopted the dollar as its base layer. And that's one thing I always say, well, if you're an American, why would you push back on that? And I think that's what's happened. We've had no zealot like a convert, Mr. Trump shifting over to being much more of a convert. And the key thing I like to point out is today, you know, we're all talking about Bitcoin, but if you look at the trading volume in cryptos, Tether, that dollar token is trading almost 3 times the volume of Bitcoin, and its market cap is about 130 billion. I remember first talking about in 2018, it was only 2 billion. It's just the technology is overwhelming, and it's really favorable for the U.S. and for the dollar.
All right, Mike. Always good stuff chatting with you. Mike McGlone, Senior Commodity Strategist. We'll talk pork bellies next time. He's there with Bloomberg Intelligence based down in Miami. I want to talk to him about oil because I'm watching the TV series Landman now. It's about the oil industry.
How is it?
Awesome.
Okay.
And so I'm learning all about the oil and gas business. That's a tough job.
Is this how you read the grid and then you're like, I know everything about
I know
power?
everything about
is this
the grid.
Same sort of thing?
I watch Yellowstone. I know all about the ranching business.
Okay,
I'm all good on that. So now I'm learning about the oil and gas business. And working on the fields, that's a dangerous job.
Oh, it's really dangerous, yeah.
Man, those guys.
I was talking to somebody today, though, that the more they can take safety sort of out of the field using AI or automation or other sort of efficiencies, like just the better it is, and it reaps the benefits super quickly in terms of their efficiencies and cash.
Yeah.
This is exciting. I'm going to start to quiz Paul on
It's
things.
very cool. Midland, Texas. I mean, they really pay attention to the daily move in oil prices. That's for sure.
Yeah.
Big time.
And drill baby drill's great, except when the prices go to 50 and then it ain't so good anymore. Right. So we'll see how much, if it's still capital preservation, is still on top of the list. All right, coming up in the next hour, we're going to talk to Paul Goldberg, Bloomberg Intelligence Senior U.S. Equity Analyst on TD Bank. Plus, Ellen Wall will be talking about oil and OPEC Plus with us. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Thursday, everybody. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We are live from our Bloomberg Gold headquarters right here in Midtown Manhattan. Also check us out on YouTube as well. All right, coming up, we're going to talk about some individual stocks that are on the move. TD Bank is one of them. Paul Goldberg is Bloomberg Intelligence Senior Equity Analyst. He'll be joining us on that. Plus, Ellen Wall, President of Transversal Consulting and Senior Fellow at Atlantic Council, will be joining us on the OPEC Plus plan to delay returning barrels to the market in April. It was pretty expected, but we want to dig into some of those details as well. Plus, Bloomberg Television, Francine Lacroix speaks exclusively to the right leader, Marine Le Pen, the far-right leader in Paris, as well as to talk about what's happening with President Macron as we are counting down to his speech that comes about 2 p.m. Eastern time. And we also have a lot of retail earnings that are coming out now after the bell. I've been hearing a lot about Lululemon. Is it going to do well? We're going to talk with Jen Bartashis, Bloomberg Intelligence Senior Analyst there. All right, let's get you caught up, though, with the business flash. And for that, we go to John Tucker.
All right, slightly risk-off today as investors wait for tomorrow's all-important jobs report for any indication about the future path of interest rate policy from the Federal Reserve. Some of the airlines getting a boost today. American Airlines jumping, raising its profit expectations for the final months of the year. Right now, shares of American Airlines 13.4% higher. The booze maker Brown-Forman, those shares rising over 8%. The company reported earnings per share and organic sales for the second quarter. That beat the consensus estimates. And then Dollar General shares, they're gaining. Analysts highlighting the discount retailers better than feared. Third quarter comp sales and the gross margin there as well. And meantime, David Leibovitz at JP Morgan Investment Management says, you know what, a number of factors have shifted him now away from fixed income and more into stocks.
Deregulation, tax cuts, so on and so forth. We wanted to lean more a little into the equity side, one where valuations are more attractive, than the Mag 6, but also where we think there will be a direct benefit from some of the policies that will come through starting next year.
Right now, the S&P 500 just 5 points lower, 6,081 after yesterday's record close. The Dow 76 points lower. That's down about 0.2%. The Nasdaq 133 points lower. That is down about 0.1%. Let me just give you an update on the story that we've been following since yesterday. This is the shooting in Midtown. ABC says police appear to be closing in on the identity of the suspect who gunned down United Healthcare CEO Brian Thompson. They've sought a search warrant for a location in New York City where they believe the suspect may have been staying. ABC also says police now have a pretty good sense of who the shooter is. They're still looking for him. He did leave clues at the scene. The words delay, depose, written on a shell casing, and a live round recovered in front of the New York Hilton Midtown. So that's all we know at this point. And we check the markets and other news for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. As John was just reporting, a little bit of a pullback here in the equity markets. Nothing to write home about. Yields a little bit higher here. Let's check in with Vince Signorella. He covers all these markets for Bloomberg News. Talks to a lot of the traders out there on the street, getting a sense of what's moving markets here. Hey, Vince, what are you seeing over the last several days in markets here?
I think we're just seeing some waffling, as you mentioned, going into the jobs numbers tomorrow. There's obviously a great deal of uncertainty. The Fed has moved away from the labor market a little bit. It's pushed it more to the back burner. Inflation is a little bit more key, I think, at this point. They're just hell-bent on getting back to their 2% neutral rate. But I think more and more when you talk to traders, the idea of 2% seems a little bit out of reach with a $36 trillion national debt. I think the neutral rate on this, I think people believe the neutral rate's a lot higher, more like 3 to 3.5. And they're probably a lot closer to it than maybe they think. And with PCE stabilizing and even coming up a little higher in the last few readings, I'm not so sure how much more the Fed can go. And I think traders are in the same boat. It's not going to be the Fed that carries us going into 2025. It's going to have to be earnings. And that's basically what people are looking at.
All right, let's talk about earnings then. Individual companies. What has been some of your takeaways or standouts that you're paying attention to today?
I mean, it's tech. Look at Salesforce. The question, I think, going into 2025, look, we've had it in 2024. We're up 20-25%. It's not what has happened, but what's going to happen. Can tech continue? There's been talk about, there's going to be some major depreciation write-offs that are going to hurt earnings. That was a Barclays take about a month ago. Will tech be able to get the returns from the investment they're putting forward? And, realistically, that more or less that's a 3 to 5 year period. So not so sure 2025 earnings are going to be able to keep pace with 2024. So might be a little bit of a headwind going into next year.
Hey, Vince, we're keeping a close tabs on what's happening over there in France, and we've seen some weakness in the euro, but it seemed to have recovered here and kind of steadied here. What are you hearing from some of the folks in the currency markets?
It's the response, and I heard you mention that there's going to be an interview with Le Pen later with Francine. It's going to be interesting to see what she has to say, because the response so far from Le Pen has been cordial, for lack of a better word. Macron doesn't need to resign. They're going to pick a new PM. We're likely to hear about that later tonight. Macron is supposed to speak, I believe, at 8 p.m. France time, European time. And so we'll get an idea what's going there. But there's not been this sort of tit for tat fight between the left and the right that markets had anticipated with the fall of the French government. So it's going smoothly. So no one's really upset about it.
In Vince's former life, he used to trade FX, so he's still a recovering FX trader on that end. But I did want to ask and tie it into equities too, because I feel like U.S. exceptionalism, I can't find a really strong argument against it when it comes to the equity market, and I'm wondering if that continues in the FX market as well.
So here's the thing. Yeah, the dollar is bid. It's going to stay bid, I think, for a little while. It's down a little bit today, but nothing substantial. The problem with tariffs is, in the long run, it substantially hurts the currency. So depending upon Trump's take, whether this is just a little bit of fear mongering, just trying to like gain some leverage in negotiation on his part, or if tariffs really become a major play, it's eventually going to hurt the dollar. And there's quiet talk yesterday. It's not made a lot of headlines. His pick by Navarro as a trade advisor could have very substantial implications next year as to what that tariff situation looks like, in particular for China's offshore currency, and what that means for basically import-export prices next year. Could be very detrimental.
All right, Vince, thanks so much for joining us. Vince Signorello, Bloomberg macro strategist for Bloomberg News, joining us via Zoom from the home headquarters in White Plains, New York. Appreciate that. Let's talk banks. Let's talk at Canadian banks. Toronto Dominion Bank, TD Bank. TD is the ticker, down 5% today. Some disappointing results coming out of that Canadian lender. Let's get the latest. We can do that with Paul Goldberg. He covers all the banks, including the Canadian banks, for Bloomberg Intelligence. Paul, talk to us. What did you hear from TD in their latest results?
Good morning, Paul. Thank you for having me. The results were fine. In general, revenues were up, fees were okay. Provision was a little bit higher, but it was still kind of within what people were expecting. So I think the biggest pain that the TD Bank is having, obviously, the AML resolution and the asset cap and the things that are happening in the U.S. And TD was the last bank to hold an earnings call this morning from the 6 banks, and all the other 5 are pushing into the U.S. as the market that they can grow into, whereas TD is not having the opportunity to do so.
So TD also says in the statement, quote, they're currently undertaking a strategic review of organic opportunities and priorities, productivity and efficiency initiatives, and capital allocation alternatives. What does that mean? Is that good? That sounds bad.
I don't think it necessarily sounds bad. I just think the areas where they can go to increase while they kept in the U.S. are not easy areas to grow market share. So one area, obviously, with domestic Canadian banking, they're one of the top banks. And it's an extremely competitive market with those 5 peers that I mentioned. The other area is capital markets, where they have the TD Common business, which is not restricted to grow in the U.S. But as we know, the capital markets operations are extremely competitive in the U.S. So,
just one of the things I just want to get to quickly, they pulled their guidance. That's never a good thing. How did they defend that?
I don't think they defended that because there's not really much they can do. They did explicitly say that they don't think they'll be able to produce an earnings growth this year, which after they provided the numbers for the restructuring in the U.S. that they were planning to do, we estimated about 25-30 cents hit, and there were still, even in consensus, you saw the numbers were kind of looking for flat to slightly higher earnings. So it's out there on the table. I don't think it's necessarily something unique that they've done.
All right, well, TD Bank stock in the U.S. is down over 5%. Hey, Paul, thanks a lot. Paul Goldberg, a Bloomberg Intelligence senior equity analyst, joining us on that. All right, let's get to some oil talk here. You got WTI up by 0.2%. 68 is where we print the news. Widely expected, by the way, is that OPEC Plus is delaying the revival of its oil production by about 3 months. It's the 3rd time it's had to defer this move as crude prices really struggle. So I wanted to get a read on that with Ellen Wald, president of Transversal Consulting and senior fellow at Atlantic Council. Ellen, how unanimous was this? What was it like for them to get to this decision? Because OPEC Plus is not as harmonious as one may think.
Absolutely. It does seem as though this decision was arrived at, by consensus. It doesn't seem like it was all that controversial, though. Remember, the meeting was actually supposed to happen last week or earlier in the week. So clearly they needed a couple more days to get all the ducks in a row, get everyone to agree. I would imagine that some of the tougher, parties to get online might have been the UAE, because their They've been waiting for this baseline quota increase for a while, and now they're pushing it off again by another 3 months. So, that's what I imagine, because it was all done virtually. We didn't really get a front row seat into, how it all happened and what was going on. But it does seem like everyone is on board with all of these changes.
Ellen, I know when we talk, global crude oil, we have to have a sense of supply and demand here. It is a commodity. What's the demand model looking for a lot of folks out there these days? I think, hence, it's $68 for WTI crude oil. I just deduce it's not that great.
Yeah, I think that's probably lower than most OPEC members would want right now. I think Saudi Arabia is really fine with it. I mean, would they all like oil to be higher? Sure, of course they would. But, we're not in like crisis territory at all right now. I do think that, when we're looking at demand, it's a very sketchy picture. For a while, OPEC was having forecasts that were showing a lot higher demand, and that was definitely what was fueling a lot of the anticipated return of this production to the market. The OPEC forecast, OPEC's, economic team was showing a lot more demand growth that was going to be happening in 2024 and 2025 than I think materialized, and I think that they see going forward. And so this is definitely a reflection of modifications in terms of what they think demand is going to be. I think the long-term picture is still pretty strong, but right now, we're really not looking at major increases in demand.
Javier Blas is a Bloomberg opinion columnist. He also writes the book on OPEC as well. And he had a really great column out earlier in the week that said that the number 2 official in the Iranian delegation to OPEC Plus published commentary on his country's state-run news agency on November 26th. It was since taken down. It was taken down really fast. But he argued that OPEC Plus is facing a supply glut largely of its own making following several years of production cuts. Which, as we can understand, that strategy winds up supporting those that have lower input prices, like, say, the U.S. or offshore drillers, and encouraged higher supply outside of the group. Is that a view that is acknowledged at all in any way among the doors of OPEC officials?
So I think that that's definitely kind of this ongoing debate here. Is OPEC, by curbing their own production to try to support prices, is that in effect basically opening the door for all of this non-OPEC production to flourish? And that's been the case basically since OPEC got started. I mean, this is not a new point that he's making. This has always been, an issue. This has always been something that has been problematic. And I think that you have to, when you look at it in the long, the kind of big picture, you're looking at, look, there are cycles in oil prices. It all goes through cycles. There's boom and there's bust and there's higher prices and there's lower prices. And there's always non-OPEC production to contend with. And unless OPEC has real hold on the majority of the supply, they can't control the market, and a period of very high prices is going to lead to more production, from non-OPEC sources, and then you have periods of low prices, and you're going to see some go bust. So I think that he's making a point. He's saying that by curbing production for so long, we've supported prices, enabled these other guys to produce more. I think that's normal. They could have decided to continue to take the Ali Naimi strategy, which was all-out production, produce as much as you can, and try to get these higher cost producers out of the market. I don't think that worked as well as they thought it would. It definitely has potential, though. So it's definitely a tension within OPEC that is ever present.
All right, I told Alex I'm watching the TV show Landman, all about the oil business down in West Texas. So I'm learning all about this stuff. What are our friends in Texas and Louisiana and Oklahoma? What are they doing in terms of their drilling activity these days?
So it's nice that you're watching that. I haven't tuned in yet, but I'm definitely got it on my list. I think that down in Texas, it's a totally different picture now than it was, say, 5 years ago, 10 years ago. They're really looking at a very different picture. We've got much larger producers running the show now. We've had so many, consolidations, not just of the really little guys, but also even bigger acquisitions. I mean, Exxon acquired Pioneer. We've got, they're much bigger players now, and they can afford to be more strategic about their production. So I think that in Texas now, they're not really all that concerned about what OPEC is doing all that much. Production is at a record high in the United States right now. Apparently, we're 13.5 million barrels a day of production, which makes the U.S. the highest producer in the world right now. And so I think that they're really looking at it, in a longer term situation now, because they are larger producers and they're more established and they can afford to weather the lows more effectively than a lot of the smaller producers could.
All right, Ellen, really appreciate it. Thank you so very much, Ellen Wald, President of Transversal Consulting and Senior Fellow at the Atlantic Council, joining us there. Do I have to see Landman? I mean, is it good, or are you just
you
learning
have
stuff?
to see it.
I have to see it. Billy Bob Thornton. I have mixed feelings about him.
Oh, but
though.
it's not a documentary. It's a
No, it's a drama.
Yeah. He's great. Billy Bob Thornton, John Hamm.
This is what we're basing.
Not me, him.
That's
All
what
right.
that's how I'm learning the oil business.
More coming up on Bloomberg Intelligence. Happy Thursday.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Investors pretty much on hold ahead of tomorrow's all-important jobs report. We could see a hefty rebound in payrolls. The forecast at least suggests job growth topped 200,000 for the month of November. That would follow October's pretty anemic 12,000. And after yesterday's record close, the S&P 500 a little changed right now. It is down just about 3 points. The Dow Jones Industrial Average 124 points lower, and the NASDAQ 100 is 7 points lower right now. Brent crude is down about a tenth of a percent, 72.20. NYMEX crude right now 68.39 a barrel. That is down 0.2%. And Bitcoin continues its rise above 100,000, 102,057. We'll say right now. That's about a 4% pop right now. The number of millionaire 401k accounts at Fidelity Investments rose 9.5%. It's now at a record 544,000 in the third quarter.
Nice.
And Paul and Alice, just give you this update on the shooting death of the United Healthcare CEO Brian Thompson at Midtown yesterday. The hunt for the shooting suspect has brought police to at least 2 hostels this morning. The hostels on Manhattan's Upper West Side. Police are following a tip that the suspect may have stayed at one of these residences. The masked gunman used also ammunition emblazoned with the words deny, defend, and depose. The words on the ammunition may have been a reference to strategies that insurance companies use to try to avoid paying claims. So there you go. We bring you up to date on the markets and other news throughout the day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. So you head over to youtube.com, search Bloomberg Podcast. It is Thursday. That means we check in with one B. Ritholtz. Barry Ritholtz, he's a host of Masters in Business on Bloomberg Radio. He's also the founder of Ritholtz Wealth Management. Joins us from New York via Zoom here. Barry, I know your latest market commentary. You talk about the differences between investing and politics. And we just finished up a big election here. How do you think about those two topics?
So it's such a fascinating topic, especially in an era of, I don't know how you want to describe it, bad information, misinformation, gaslighting, fake news. There's just a universe of descriptors. And it's always been a challenge for investors. And I'm fascinated by, we all have these little silos. I have my car guys, I have my political friends, and I have, most of my colleagues are market investors, economists, et cetera. And what it's always struck me is so fascinating. If you vote, I'm going to use the word in quotes, if you vote wrong, if you vote against your own interests, well, the results of that may not be felt for years or decades. Hey, if you elect someone who's going to raise your taxes, and that's a big issue to you, it takes at least a year for that legislation to be approved, and then a year for it to become effective, and then you pay your taxes 3 years later, you'll feel the hit. If you vote for somebody who is going to cut your Social Security or Medicaid, you may not feel that for decades. But if you make a quote unquote, information hygiene mistake in markets, it doesn't take decades. It doesn't take years. It usually doesn't even take weeks or months. If you're making investments based on bad information, you're going to find out about it really quickly. And so making sure the information and the news we consume is accurate and objective is a never-ending battle for investors.
Right. So what does an investor do about that? And I mentioned earlier how there was some CEO polls on how they feel in the terms of confidence after the election. Man, it was overwhelmingly positive.
Well, I think if you're a CEO, you're probably in the at least top 10% of the country, likely the top 1%. Most of us in finance in New York find ourselves fortunate enough to be in that income capacity. And the expectations are that, we're going to see either a renewal of the 2017 Tax Cuts and Job Act, which lowered the top rates and created all these LLC pass-throughs, which have been very lucrative for those of us in this industry. And second, we're likely to see a whole lot more deficit spending, which tends to be, say what you will about the bond vigilantes and about the problems of ongoing deficits, big deficit spending, big fiscal policies all eventually work their way into the stock market. So if you're a CEO and most of your compensation is stock options or equity, hey, things look pretty good.
So you mentioned the deficits, Barry. I mean, I've been on Wall Street since the mid-'80s. It's been a topic ever since then, probably even before then. Nobody seems to care. I mean, does the market care?
Well, here's you again, back to the comparison between markets and politics. If you're an investor, or you manage money or you invest your own money, there are a million different ways and metrics that you get measured by. How did you do on a total return basis? How did you do on an absolute return basis? Are you keeping up with your benchmark? Are you beating your benchmark? How are you doing against your peers? Finance is number driven, and we're constantly being evaluated. If you're not doing a good job, your clients let you know about it in no uncertain terms. With politics, it's so much squishier. So like you, I've had a similar experience with the deficit scolds and the people concerned about excess spending, quote unquote excess spending, the folks who put up that giant deficit clock off 6th Avenue.
Oh my God, that
and
one,
here's what I've been hearing about since college. This deficit spending is going to destroy the dollar. It's going to crowd out private capital. It'll make it too expensive for Uncle Sam to borrow. It'll cause hyperinflation or structural inflation. And how are private companies going to be able to access money? It'll crowd all of that out. And I've been hearing that literally for 50 years. And by any objective measure, absolutely none of it is true. And, you learn early on on a trading desk, there's not a big difference between being early and being wrong. All right, if you're early a day or two, maybe your returns aren't as strong as they might have been. But when you're off by half a century, that's not early. Just what you're saying is not supported objectively by the evidence. When someone says, if you do this, these are going to be the results, and 50 years later, none of those results happen, you have to say, and I say this, I'm not an MMT person. I think eventually somewhere out there, there's a number that's too high. But, after 50 years of crying wolf, maybe we need to rethink the significance of deficits, because everything we've been told that's terrible and is going to happen just hasn't happened.
So based on that, Barry, I'm just curious, and I don't want to be, the broad views are so important when it comes to how you look at things. But for next year, like, what's on your list? Like, is there a Barry checklist that we should all be keyed in on right now?
So, every time we look at this time of year, we see all the forecasts for what the economy and the market's going to be like. The problem with looking a year out is so many random events happen, whether it's a pandemic or a Ukraine invasion or the Gaza war. Like, none of those were on anybody's list the year before. So 12 months is lots of time for random surprises to happen. So I really just want to look at where are we today and what possible risks should we be wargaming that could derail the economy. And when we look out, hey, it's a strong economy. The problem we're still wrestling, some of them date back to the pandemic, others date back to the great financial crisis, which is hard to imagine. It's 15 years later, but there's been a shortage of semiconductors, and that's why the U.S. is interested in Taiwan. We certainly don't want to see that become a problem. We still are slowly ramping up our automobile production. There's a shortage of used cars because there weren't a whole lot of new cars put out in 20 and 21. Took a while for that to ramp up. The financial crisis led to home builders pivoting to multifamily and apartments. And depending on who you want to believe, the National Association of Realtors, the home builders, all the different trade groups were 2, 3, maybe even 4 million homes short. And all these things are going to take a while to catch up. We also, the reason we still have a 4 handle on unemployment this deep into the cycle is there's a shortage of qualified people, not just at warehouses or fast food places, but across the entire labor market, especially in the STEM spaces. When you look at AI, when you look at how people manage internet security, cybersecurity, when we look at genomics, across the board, those areas have a structural 10 to 20% shortage of bodies. Look at the shortage of CPAs and CFPs in the U.S., certified financial planners. Like, there's a lot of young folk and there's a lot of old folk, but there's a 20-year gap where people were kind of afraid to go into those fields, first thinking it was going to be outsourcing that would replace those people, and next thinking it's AI. But the reality is, like, we have Ritholtz Wealth Management has a tax practice. We're constantly trying to hire CPAs. They are unicorns, and every time we find 3 or 4 people we offer jobs to, their bosses outbid us to keep them where they are. So that's just one field. CFPs is an area where there's been a shortage of. Certified tax planners is an area. You could look across just about any sector in the economy, and there just aren't enough high-quality, well-qualified people to fill both the current openings, but looking out a year or so. And so that's a little bit of a structural inflation issue. Those wages keep going up, even though wages seems to have steadied down at those specific jobs. But the other thing is the structural shortages that we've developed in the U.S. economy very much acts as a tailwind, and that's going to keep the economy growing and keep the market growing.
All right, Barry, always great chatting with you. Barry Ritholtz, host of Masters in Business on Bloomberg Radio, is also the founder of Ritholtz Wealth Management. Always got, and you can check out his website, ritholtz.com. Lots of good research and market musings there here. Looking at the market here, kind of mixed here, Alex. I guess kind of waiting on the jobs data tomorrow. That'll be a key data point for our Federal Reserve as the Fed meets December 18th. And I guess generally the expectations are for a quarter-point cut. Then maybe a little bit of a pause. It kind of gets a little squishy after that.
Yeah, and then is it actually wind up priced in? And if it is, then what's going to wind up being in the markets? I keep hearing it's not going to be the Fed next year. I keep hearing that it's going to be earnings. So speaking of, you got Kroger, for example, those sales for the third quarter missing estimates, but that stock is higher on the day. We also had Dollar General coming out, narrowing its full-year guidance due to challenges attracting bargain shoppers, but they did say they saw signs of progress in the latest quarter as well, with comp sales rising over 1%. We also had some of the airlines come in and have a good update in terms of what they're seeing right now in terms of spending. So, where the consumer goes is a really tricky conversation. We're going to talk to Jen Bartashis, Bloomberg Intelligence Senior Analyst for Retail and Packaged Food. This is Bloomberg Intelligence.